great. You do it, Sharon? You do. So.
All right, good morning. Let's come to order the second day of our Washington Select Committee meeting. Christian, we've got a very busy agenda today with quite a few bill drafts, so we'll try and get through things quickly and always take public comment. We'll try and make sure that public comment stays through the sites. I remind attendees that there are here and haven't signed in yet, please do so. We've got a sign sheet over there. We'd like to make sure that we have record of your participation, and of course you're welcome for public comment when we get to that stage. Mr. Chairman, before we get started, any comments or thoughts?
Thank you, Mr. Co-Chairman. I thought we had a really productive day yesterday. I look forward to hearing from today.
Excellent. Good. All right. Well, up first is our special purpose depository institution legislation. We had a working group that spent some time developing a few new pieces of legislation we haven't seen before. These are effectively amendments to existing special purpose depository institutions legislation. And then we'll have a revisit where we merge a couple of previous bills up first. So I'll ask you to come up and walk us through the bills. Description. What I was thinking with these bills, since they're all speedy amendments, is to walk through all four of them and then start taking public comment, go to Jeremiah, go to our other public comment. I'll remind the committee that since these are all Title 13 bills, in statute, our select committee is not able to sponsor Title 13 bills, so we work them and we can either hand them to the Minerals Committee. The Minerals Committee is not meeting again, so that would be relatively tough. Or we can individually sponsor them, which is probably what we'll have to do with the bills, is take them, sponsor them as members of the committee as opposed to the committee itself. So with that, please will you walk us through the bills, and maybe we'll pause between the questions from the committee, or if questions come up along the way, please don't hesitate to raise it. With that, let's get started on 13.
Mr. Chairman, members of the committee, please Sampson, Secretary LSO. I'll start by presenting 26 LSO 13 version 0.6 state banks and speedy conversions. At the committee's May meeting, the committee directed LSO to combine the two bill drafts from the May meeting on speedy conversion and state bank conversion into one bill draft, so that is this bill draft. I'll just go over a high level overview of this first bill draft. So the high level overview is that the bill draft authorizes the state banking commissioner with approval of the state banking board to convert the charter of a speedy to a state bank, and authorizes the charter of a state bank to be converted to a speedy. In both instances, the bill draft requires the speedy or state bank to file an application to convert, which contains a comprehensive plan. The bill draft outlines requirements for the application and the comprehensive plan and a process for reviewing the application, including criteria to be considered. The bill draft specifies that if the application is approved and a charter is granted by the board or commissioner, then the converting speedy or state bank cannot commence business as a state bank or a speedy before receiving a certificate of authority to operate from the state banking commissioner. The bill draft outlines the requirements for an application for a certificate of authority and the process for approving or denying a certificate of authority. The bill draft specifies that a speedy or state bank that results from a conversion is deemed to have been in existence for the same period of time as the state bank or speedy from which it converted, and it must surrender its old certificate of authority and cannot use the term state bank or speedy. And I'll stand for any questions.
Thank you so much. Any questions? I recall we worked this through last time, and we'll check in with Jeremiah. There you go. Okay, good. To make sure things are okay on this, but in statute, we have the capacity for many financial institutions to convert from one to the other. There were some requests by stakeholders to ensure that we have the capacity to convert in and out of the speedy bank from state bank. So this legislation basically provides a process, and you can close that before. Any questions?
Mr. Chairman,
Go ahead.
just to add to that, there's a few things in there, too, that, some dates and timelines too, so they have to be reviewed within 90 days by the commission. And then, they have to either be, denied within 30 days of the application. If the applications have then denied, they do have another 90 days to be. Either moving forward, it's just not just cut and dry. I'll see you later.
Excellent. Thank you. Further questions, points, discussion? Seeing none, thank you, please, on to the next.
All right, Mr. Chairman, the next bill draft is bill draft 26 LSO 59, version 0.6, special purpose depository institution amendments. So just a high level overview of this one as well is that the bill draft amends the speedy initial capital requirements by requiring the speedy to have capital stock and be paid, have a paid up surplus fund to commence business rather than to be chartered. The bill draft changes the amount of estimated operating expenses required to commence business from 3 years to 1 year. The bill draft amends the application for the speedy charter by requiring a comprehensive estimate of operating expenses for the first year of operation instead of 3 years, and requires a plan to raise the capital required instead of providing evidence of the capital required. The bill draft provides that if an approved speedy fails to commence business in compliance with the requirements prescribed by the commissioner within 1 year, after issuance of a certificate of authority, then the charter and certificate of authority shall expire. That is an increase from 6 months currently, so it would move it to 1 year instead of 6 months. The bill draft adds the expiration of a charter and certificate of authority for failing to commence business as a decision that is appealable to the court. And then it changes the appealable court from the district court of the county in which the speedy is to be located to the chancery court. And I'll stand for any questions.
Thank you. Any questions or discussion? Go ahead, Senator.
Thank you, Mr. Chairman. Please, on the chancery court requirement that it has to be filed in chancery court. How does that work with our current rules? Outside of statute, our current rules that allow you to opt out of chancery court. Because in other, if someone files in chancery court and the other party doesn't want to be there, you can opt out. So how would that work with that current rule that we have, not necessarily in statute, but it's in the court rules.
Good question, please. Thoughts?
Mr. Chairman, Senator Frago, I haven't looked into that. I'm not exactly sure how it would work. I think that with the other statute allowing them to opt out, if they want to, I still think that would apply if they would initially possibly have to apply to the chancery court. I'm not quite sure. That might be something that we'll have to consider.
Next, please, Mr. Kaufman.
Yeah, thank you, Mr. Chairman. Senator, so currently, any agencies that sit in Cheyenne, when there's an appeal from those agencies, they go to Landon County District Court, and there's not a jury right for those. So we just chose Chancery Court as the home court for this, since there's no jury right anyways, it's just on the appeal. This would be an appeal from the decision of the board for a division.
How would that work with the opt-out provision of the other? Senator Craig is exactly right. We just have that provision that either party engaged in opt-out of the chancery court explicitly. And this is an appeal to the chancery court, taking the language to the chancery court, which theoretically would allow an opt-out to the district court.
You're talking about, Mr. Chairman, you're talking about opt-out rules for Chancery Court.
Correct.
Yeah. And so all I'm saying, the primary reason we have those opt-out rules is for right to jury trials. On the appeal, you don't have a jury right anyways.
Do you think that language then doesn't govern? Because even though that was in the motion for it, I think the language, plain language says, if I say I don't want a chancery court, I can have a district court. Even on this appeal, and I don't have a language problem, but I see the Secretary.
Yeah. We could pose that question to the Chancery Court Committee, but obviously I don't know the sites off the top of my head, but
Yeah.
there's a lot of places where we require any of the agencies in Cheyenne. If there's an appeal of those agency decisions, it goes directly to district court, but there's not a jury right on those appeals.
Okay.
So we're just selecting a form for the appeal.
Senator Craig, thoughts?
Thank you, Mr. Chairman. So just to add to the conversation, I mean, the language we're striking actually says the county in which the institution is located, which would not be there in the county. I'm not, I don't have a dog in the fight. I just want to make sure we're not messing up without statute, we're not crossing wires with the rules that are already in place. That's all I was getting at, is not necessarily opposed to the idea, but I just don't want us to get us in a bind where, you know, we have a litigant say, hey, we don't like Chancery Court, we don't want to go there, we're not comfortable there, which that's becoming less and less of a problem. I mean, the caseload there's obviously getting bigger, people are getting more used to it, but you still have some lawyers in Buffalo aren't, you know, comfortable with Chancery Court. So just saying that there are places where people are gonna opt and not go to Chancery.
All right, well, so we'll have to check into that, maybe we'll get some public text on one and but I don't know that we will, we get on for that, so we might have to take a look at that, Mike. Anything else? Oh, I see, Joel, go ahead. Mr. Rowley,
Yeah, thank you. Just, I wanted to let you know that
there you go, you're back.
we can hear you online, but it sounds like the microphones are not directly connected to the internet connection. It's just sort of like there's one mic in the room that's picking everybody up, so it's not able to get everything that's being said.
Gotcha, so maybe going to the under, or the overhead mic for the room, we'll look into that.
Thank you.
Yep. So. Haven't identified anything yet?
No,
Whoever just spoke, that's the microphone that is active. They were right by the microphone that's transmitting online.
And I don't know whether, I mean, that probably helped, but I don't know whether it solves the problem. Okay, should be good now. Is it sounding good?
that's
Yeah.
better, much better.
Yeah,
Yes.
it's back to how it normally is.
Excellent, thank you. Appreciate it.
Yep.
Thanks for pointing that out.
Mr. Chairman,
Yep, go ahead.
I have one more question.
Yep.
So on the bottom of page 4, Talise, and I think what we're trying to get at here was the denial of an extension is appealable, but it says, or the expiration of a charter and certificate of authority is appealable. And I'm not sure, and I might just be reading it wrong, and so maybe someone on the committee can help me, or Talise, you can. I didn't know if we were talking about the denial of the extension is appealable or the actual expiration, because the expiration would happen naturally. Do you get what I'm trying to get at there?
Talise, thoughts?
Mr. Chairman, Senator Craigo, yeah, the discussion at the Speedy Working Group was, they wanted to add the expiration of the charter, not necessarily the denial of the extension, but that is definitely something that could be added if we wanted both, or maybe Mr. Kaufman could expound on that addition.
Mr. Kaufman, what are your thoughts? We can talk to Jeremiah.
Yeah, so Mr. Chairman and Commissioner Bishop can comment on this as well, but my recollection of the discussion was, so there's this new requirement now coming in that chartered SPDIs have to commence business within a certain amount of time, right? Or they can forfeit the charter. The division has the ability to put requirements on those certificates. So I think what this language was ultimately getting at is if you either fail to operate, the charter expires, or you don't get the certificate of authority, or conceivably you want to challenge some of those requirements, it's all potentially appealable. Jeremiah has given me a nod of approval, so I think I said that
Like
right.
to hit that right? Follow up?
I think that makes sense to me. I'm not positive that language hits that exactly, but I think we could work on that. I think it gets us the general direction. I just was raising that because as I was reading it, preparing for the meeting, I wasn't sure if we're talking about the denial, which you know, extension, which could also relate back to all of the additional terms and conditions placed upon the certificate. But anyways, just asking that for clarification. Thank you, Mr.
Thank you.
Chairman.
Yep, let's take note and have Commissioner Bishop answer that one as well. Anything else on this bill draft at this time? All right, seeing none, let's move to the next.
Mr. Chairman, the next bill draft is 26 LSO 174, version 0.2, speedy contingency account repeal. So this bill draft would repeal Wyoming statute 13-12-106, which is the statute that requires a speedy to maintain a contingency account for unexpected losses and expenses. And it also repeals a conforming repeal of 13-12-122B1IB, which repeals the circumstance where a speedy has failed to maintain a contingency account. And if it has not been remediated within the prescribed time, it results in the commissioner conducting a liquidation or appointing a conservator if they don't have that contingency account. And I'll stand for any questions on this one.
Thank you, Talise. Let's go to Mr. Kaufman for a little background on this.
Yeah, Mr. Chairman, I think the simple answer here is this is a feature to try to maintain competitiveness for the speedy with other charters. And this is an issue that keeps coming up that frankly is an impediment.
Well, I'll just for the sake of exploration and understanding, can you provide a little more context on why this is a challenge and how it's different from a traditional state chartered bank?
Yeah, Mr. Chairman, it potentially adds to the capital requirement, and it creates, I guess, another way in which the division has to evaluate, right, what that capital requirement is going to be and how to maintain that. And it is different from some of the other, not just the other charters, but other innovative state charters that we're seeing around the country. And so the thought was this isn't really being utilized. It's not needed. And yeah, to maintain competitiveness and good optics to remove it.
Mm-hmm. Well, I know that when we were establishing the SPDI, this account and a few other aspects of the way the speedy was structured were to provide confidence as we were starting up the program and ensure soundness and consumer protection. It sounds like the capital requirements are sufficient for that, and that the contingency account is effectively redundant excess to the capital requirements is what we've found. Is that a fair assessment?
Yeah, I would say so, Mr. Chairman.
Okay. And Jeremiah, I'll ask you to note that one to address as well. Thank you. Any other questions on 26 LSO 174 at this time? All right. Talise, last but not least.
Mr. Chairman, the last bill draft is 26 LSO 175, version 0.5, speedy resolution fund account. So the high-level overview is that this bill draft creates a speedy resolution fund account. This is similar to the trust company resolution fund account. In this account, a portion of each supervisory fee paid by speedies is deposited into the account and used by the commissioner in the event of involuntary dissolution of a speedy. The amount of the supervisory fees deposited into the account shall be established by rule of the commissioner. The staff comment on page 4 highlights that this language would allow the commissioner to require anywhere from 1% to 99% of supervisory fees to be paid into the speedy resolution fund, and that the select committee may wish to consider whether to specify the amount of supervisory fees that should be paid into the speedy resolution fund. The expenditures from the account shall be made using warrants drawn by the state auditor and upon vouchers issued and signed by the director of the Department of Audit or by the commissioner, and funds can only be used to carry out the duties of the commissioner in the involuntary dissolution of a speedy. And I'll stand for any questions.
All right, questions on the resolution account? Explanation, Mr. Kaufman?
Thank you, Mr. Chairman. I feel like I'm stealing Commissioner Bishop's thunder on this. So this was one of his ideas, but effectively, Mr. Chairman, when you stand up a speedy in Wyoming, one of the capital requirements and one of the larger capital requirements is a $15 million, pledged capital component. And that $15 million was originally conceived right after the SPDI legislation was passed. We're not really sure if that number is any good anymore or even frankly, at this point, how that number was arrived at. And the commissioner can testify more on that, but we think it was effectively an estimate at that time of what experts thought it would cost to wind down an SBDI. And so the idea being you pledge that capital, the state has that, the state can be made whole in the event of a wind down. Again, we're not sure that that number is remotely accurate anymore. In fact, we have really good reason to believe it's not even close. And then secondly, this mechanism would mirror what's in place already for trust companies, and just seems like much greater parity, a much smoother and eloquent solution.
Excellent. Thank you. Questions for either Talise or Mr. Kaufman? All right, seeing none. Thank you so much. Appreciate it. All right. With that, let's bring up Commissioner Bishop. And Commissioner, I'd ask that you kind of go through each of these one at a time also, and any comments that you have at this point in time, even with the first bill, although hopefully the first bill's in pretty good shape.
Great. Thank you, Mr. Chairman. I'm Jeremiah Bishop, the State Banking Commissioner. I will start with LSO 13. That is the state bank and speedy conversions. I think at least covered that really well. I think we kind of put this together during the last session and also last meeting. I don't have any edits or recommendations on this one. I think it's pretty straightforward. It just lays out a process for a speedy to convert to a state bank and vice versa. And we've made it follow basically the same path as if it was a initial charter application. So they still must meet all the same requirements that a de novo company has to make. It still goes to the board unless they decide to make it come to the commissioner, then I can decide on that just to expedite it if we need to, but that option is with the board. They did want to keep that. So I didn't have any other comments on this one, but if there's
Great.
any other questions.
Any questions on this draft? We have worked this pretty well. Okay. Seeing none, thank you. On to the next.
Great. The next one, number 59, the SPDI amendments. This is the one, thank you all for putting this on the agenda. I think I kind of asked for this at the last meeting. And we did some good work with that working group since the last meeting. Just a little bit of background on kind of the reason behind this bill. Once an SPDI is granted a charter by the State Banking Board, we typically give a list of requirements that must be met in order to receive the certificate of authority to operate. An SPDI can't commence business without that certificate. So we have a long list of items that must be included in an application for that certificate of authority, COA. And one of the bigger hangups is, I think, the capital raising piece. Were a lot of inconsistencies throughout our statute of when should capital be paid in. Some, I think, said at the time of application, some said before receiving a charter, some said commencing business. So part of this is cleaning that up and making it very clear that it's when they commence business is when the expectation that capital is actually raised and paid in. I think that is just clear and consistent for everybody. The one thing it does do, however, is it changes the order of things with our certificate of authority. Instead of our big long list of items, things like getting policies, paying in capital, getting either a master account or a bank account, among other things, prior to getting that certificate of authority, it pushes all that till after you get the certificate of authority. So I think it makes it very clear. You get the charter. The application for a certificate of authority is basically let us know who your directors and officers are, and I think your address. So you do need a lease at that time. At that point, you'll make the application for the COA. As long as it has that limited information, we would approve it, along with a list of our requirements to commence business. Now, this list of requirements is basically going to be the same thing we currently have for the COA application. It just puts it to after the COA, you must meet those requirements prior to commencing business within 12 months or the charter is expired. So it adds some more clarity, I think, onto the applicants that we know exactly when this needs to be done by. And it also accomplishes what I think I was asking for was let's put a deadline on this. We don't want these things sitting out here for, at 1.45 years without opening. Because at that time, a lot of things were changing with the business plans, so we're kind of negotiating that with some of our current speedies. So it kind of puts that 12-month deadline. We did extend that because we did feel, I think, 6 months wasn't long enough. It's hard to implement a core banking system and everything else in 6 months in some cases. So add it to 12 months, and also it can be extended with an application to the state banking board. That goes to the board. They can deny it or they could approve it. There's no limits on how long of an extension it is or how many extensions they can get. And then I think one of the questions, a great question, was the Chancery Court. I think that was one of the things we decided to throw in there. I'm not an expert on this, but my understanding from the discussion is that this appeal, I mean, first thing goes to the Chancery Court. The parties would be the applicant and the division. And if it sounds like there's a mechanism in place to say, we don't want to go to the Chancery Court, and then it defaults to the district court, is my understanding. So I think keeping it how it is, you kind of capture both. You at least have the option of the Chancery Court. And if myself or the applicant decides we don't want that, well, then we can just make that follow the existing rules, and it goes back to what it originally was. That's my understanding, but I'm not an expert at that. But we're okay either way with that.
Thank you. And on that, that's how I would understand it also, but I do think we really need to check it out. I would think you could defer based on the language elsewhere in statute to the district court.
Yeah, Mr. Chairman, I realize we're not to amendments yet, but I'm just
Right.
thinking, I mean, maybe we could just add some language in there, Chancery Court subject to, and cite the Chancery
Oh, that's a good idea.
statute, right? So it refers back to the rules,
Uh-huh.
making it clear that there's an opt-out right.
Yeah, I like it. Let's note that. Thanks. Continue, Jeremiah. Thank you.
Great, thank you, Mr. Chairman. And then the other things were just the cleaning up of the when is the capital paid in. I think that was one of the more important pieces of this. And then it does change the capital requirement for the initial capital from 3 years operating expenses to 1 year operating expenses. I think that was discussed this working group. That is to provide parity with traditional banks. And our non-depository trust companies, both of those, if there's de novo applications, it's 1 year expenses. And so this is just making that consistent with other entities. And then the one piece where it kind of makes the conforming edit to the application must include 1 year of expenses. We'll still probably ask for 3 years. It's just we'll only use the 1 year for the calculation of that initial capital. And again, this is initial capital only. Once they're operating, they fall subject to our capital guidance, just like any other institution. That's all I had on that, Bill. If there's any other.
Bottom of page 4, the discussion from Senator Crago about the expiration of a charter and certificate of authority under. Yeah, I see the concern there, just kind of the structure of that. Appealing and expiration is kind of an interesting structure, but go ahead.
Yes, thank you, Mr. Chairman. So I think we did want to add that in there. So if I read that in whole, not just the amendment, any decision of the board or the commissioner, whether it's approving, conditionally approving, disapproving the charter from the initial application, or the denial of a certificate of authority, or we don't issue it and it just expires, all of those are appealable. That's kind of what we wanted to capture, is that any one of those things could be appealable. Because what could happen, or what would likely happen on this expiration, is either the applicant just doesn't make the application for an extension, or maybe that extension gets denied, or for some reason they just forget that they need the extension and it automatically expires. They need some avenue to appeal that expiration, because it automatically happens within 12 months. If they're not commencing business within 12 months, it's expired. So that is, I think, what needs some mechanism to turn around. Maybe there might be a better way to word that, appealing the expiration. But if you wanted to make some amendment, just making sure that is what you want to be able to turn around the expiration.
Understood. Senator.
Mr. Chairman. Thank you, Mr. Chairman. Commissioner, so I guess my question is do you want them, an applicant, to have the ability to appeal if they forget to do their job? I was thinking more along the lines, they're appealing your decision to not grant the extension, that should be appealable. I totally understand that. I think they should have the right to appeal that. I'm just not sure they should have the right for an appeal if it's their fault they didn't do the job that they were supposed to do. And I guess that was really the crux of my question and how that's worded, because how it's worded, it covers everything that you just mentioned. I just want to make sure we're getting to exactly what you want it to cover, if that, hopefully that makes sense. And maybe you could expound on that a little bit more.
Jeremiah?
Yes, thank you, Mr. Chairman, Senator Krieger. Yeah, I think that's a good point. I can't imagine that scenario would happen, that they just forget. We would be in communication with the company saying, hey, you're coming up on your deadline. You need to do something. And maybe they want it to expire, in which case that's just what it is. If they just forget, we're going to remind them. So I'm not completely tied to this, I guess, but it does just kind of that what if, like, if they do forget, do you really want them to lose all the money they put into that that charter, simply for an oversight? Again, that's a pretty big oversight on their part, but that's also a pretty severe consequence. If you all decide, I think, to just get rid of this, I mean, we can work with that. We can just make sure that if this ever happens, we can be in really good communication with the SPDI that they need to do something. Otherwise, there's no way back.
Okay. Senator, follow up?
No, Mr. Chairman, thank you. I think that helps.
Great. Appreciate it. Committee, anyone else? All right. Seeing none, let's move on to 174.
Great. Thank you, Mr. Chairman. Yeah, 174, this is the SPDI contingency account repeal. I'll just provide a little bit more information of what that account is and kind of the reason for the appeal. So when the SPDI was first created, there was the initial capital requirements, there's the ongoing capital requirements, and then there's the requirement that 100% of on-balance sheet deposits be backed by liquid assets. Then there's the contingency account, which is after an SPDI has been operating for 3 years, that 100% backing of deposits actually goes to, I think it's 102%. That 2% contingency account can either be funded by the bank through capital, or it can be funded through each individual customer. Both of those are somewhat awkward because it's at all times. So if there's a lot of transactions in and out of these accounts, the bank is going to have to create some mechanism to make sure that it's 102% at all times. Now, if they're the one funding it through capital, that's a little bit easier. But then if they did, most likely they're going to choose to make the individual customer fund their own 2% contingency account. So if you're a customer in an SPDI, you deposit $100, you're going to also have to deposit $2 into this contingency account, which it also makes it awkward. It's not a deposit anymore. It kind of covers this. I don't know what. Yeah, that's one of the big questions is why am I covering my own fluctuations, so to speak? And that's with the talking with the existing SPDIs. That's the way they're most likely going to do this, is make the customers pay for it themselves, because paying through capital greatly increases the required capital amount, almost, I think, to a point that it's almost unworkable. So that's kind of the background of what this is and why we're at, the appeal language is there. Is I think it was put in place just kind of a belt and suspenders approach. This was a new idea. Hey, we're not just doing 100% backing, we're doing 102% backing. I don't know if the issues that creates then outweighs the benefits of, making people feel good about this chart and how it's regulated. We have other mechanisms in place if we need to. We can increase their capital requirements for a specific institution if we need to, based on their condition, and rather than relying on this mandatory contingency account. So that's kind of a background of what this is. I'm happy to answer any questions.
Questions on this? Go ahead, Representative.
Thank you, Co-Chairman. So just to get a little bit more clarification, just for me and hopefully for some other audience members, is the intent and the motive for that because of the fluctuations or the volatility that you see in crypto? So having that mandatory deposits for the contingency, is that kind of the reasoning for wanting to repeal that? Just so I understand a little better. Thank you.
Commissioner?
Yes, thank you, Mr. Chairman, Representative Wasserberger. Yeah, so these are on-balance sheet fiat deposits. So these are US dollar deposits on balance sheet. It is assumed that it is tied to possibly a custody account of digital assets. So there's going to be maybe some fluctuations in and out, but it's a little bit more control than, like the volatility price of some of these cryptocurrencies. I think it really was, we're not just asking for the 100% backing of deposits since it is no insurance. We're asking, we need more. I think it does make, I think some people feel somewhat comfortable, but this isn't the big talking piece that we get when we're talking to applicants or other regulatory agencies. This isn't what they're trying to like, oh, this is what is going to be, makes us feel comfortable. It's usually capital requirements. So hopefully that answers that question.
Any follow-up, Representative? You good?
Thank you.
Further questions? So, yeah, when it was established, obviously the 102% was trying to provide additional certainty. This still makes it a 100% reserve bank. So it's not lending. You still have the 100% in a small list of possible assets. Do you see any significant increase in risk for these financial institutions moving from 102% reserve to 100% reserve based on the existence of the capital requirements as well?
Thank you, Mr. Chairman. I do not see any additional risk by removing this 2%. If we had an institution that was troubled or had something going on with an increased risk profile, we can impose additional capital requirements to that specific institution for that reason. So we don't have to rely on this at all. If, for example, if the worst case scenario, an institution maybe should have needed this, I can impose this if we need to, and I can force them at that point to do it through their own capital. So I can go back to this if I ever need to, just through the powers we have of setting capital. So I don't think there's any additional risk by removing this. It's allowing the good players to maybe move a little bit easier without getting rid of my authority to impose additional capital if needed.
So just so that people understand, if I have $100 million of deposits in the Speedy, talk a little bit about what the capital requirements would look like in addition to that $100 million.
Mm-hmm. Thank you, Mr. Chairman. So these are depository institutions, so they must adhere to all traditional bank capital ratios. Typically, banks run anywhere from about 7 to 14% capital ratio. So all of their assets, they have 7 to 14% of capital in the bank. So if you have $100 million assets, then yeah, 7 to 14% of that in capital already. So that's where this additional 2% funded by the customer, I don't know if that adds very much benefit. So
Understood. So you basically have 7 to 14%, depending on the circumstance, of, we'll call it reserve, but it's capital, in excess of those deposits, which are reserve deposits.
Yes, Mr. Chairman, if you already have capital reserving your total assets, then you also have the 100% backing of those on-balance sheet deposits at all times and cash U.S. Treasuries. So yes, this is still, if that's all the bank is just holding U.S. dollars backed by 100% Treasuries, still with roughly 7% capital, that's a very safe institution.
Excellent.
Everything else being unconsidered.
Thank you. Mr. Revel, you just popped up. Are you looking to inquire, or did you just happen to?
I was, but thank you, Mr. Chairman. I was, but the question was just answered in
Great.
The last comments. Thank you.
Any further questions or discussion on this bill? Seeing none. On to 175.
Thank you, Mr. Chairman. 175, this is the setting up the SPDI resolution fund account. A little bit of background. SPDIs are treated similarly to our non-depository trust companies in that if one fails, the division puts them into receivership. If a traditional bank fails, we put them into receivership, but then we immediately hand them off to the FDIC. They have a whole department program of winding down banks, getting rid of the assets or finding buyers, and they bear the cost through the FDIC insurance fund. SPDIs do not have that. If we take one into receivership, we have to wind it down. We have to either return all customer assets, pay off all liabilities, get out of contracts. And in doing all that, we still have to operate the institution. So we will actually be covering the cost of running that institution until everything is wound down. So that's a pretty big risk to the division. If we have to pay for one of these, it could be relatively significant. It could, in some cases, may not cost anything. It's going to be very specific on the institution. So when the SPDI was first created, that's why we have the asset pledge to the division in an amount determined by the commissioner or a surety bond. The division set that pledge at roughly 15 million for SPDIs, that they must either get a surety bond payable to the division or pledge 15 million in assets to the division to kind of sit there in that account, that if we have to wind that specific SPDI down, we can pull on that 15 million to cover the cost. This fund then creates basically an emergency account, or let's say we run through that 15 million in winding one of these down. If we do that, we have to still cover that cost. We're another fund agency. We have some cash reserves, but most likely not enough to cover this. So we would likely be asking for general fund money to cover this cost, which I don't think anybody wants. I know I don't want it. So this is just an emergency savings account for us to put a portion of our supervisory fees into, then we could use for the failure of any SPDI. We already have this for our trust companies. So I thought it'd be probably a pretty prudent idea just to create the account. We'll still fund it through other fund money paid through supervisory fees. Just for our trust companies, we put 25% of their annual supervisory fees into this account. I would imagine that's probably what we'll do in rule for the SPDIs. They pay a semi-annual supervisory fee. We'll probably still use the 25% of that into this fund. We can change that if we need more for operating expenses, or we could even, if we need more, we could increase fees to the SPDIs. We just cut one of the most significant fees they paid us this last session with the custody fee. So we'll likely be amending their supervisory fees anyways. But yeah, I imagine 25% is what we'll do. And this can be used. It'll take us a long time to build this up, but you have to start somewhere. So any questions on the resolution?
Thanks. Questions on this bill? Any questions? So to be clear, it doesn't change anything that's currently existing. It adds a new account that in theory will build up over time and provide backstop for the funding to keep it out of other funds so that you don't have to draw upon the general fund at any point.
Mr. Chairman, yes, absolutely.
Excellent. All right. Any further questions? Any other general questions for Commissioner Bishop while he's here? Go ahead, Senator.
Mr. Chairman, if you don't mind, I wouldn't mind. I have one more question on draft 59.
Let's go.
If we go back to 59 on page 4, up towards the top, the new language that's added, compliance with requirements prescribed by the commissioner. And I guess I didn't do all my homework before I got here, and I was looking at subsection A, which is not included in the draft because it's not changed. And under subsection A, the commissioner, once we start looking at the certificate of authority, it looks like the commissioner can either deny the COA or grant it. And if there's conditions, you have to deny it. And so I was just curious where the statutory authority to impose requirements and still grant it comes from. And I'm sure it's somewhere in there. If someone could just point me in that direction. Thank you, Mr. Chairman.
Commissioner.
Yes, thank you, Mr. Chairman. Senator Craig, really good question. It is not specifically laid out in the language. So a little bit of background of why we added this sentence. The current language, I think it's in A for the certificate of authority, is the directors, you must give me a list of directors and officers, and you must give me your address. If we keep this language going through, they make that application for the COA just listing those two items. Directors and officers and their address, that's all they provide me with that application. I give them the certificate of authority to operate. They can then commence business at any time. The problem is that's not there's a lot of other items you need to successfully open a bank in a safe and sound manner. that's not in that statute. You need a core banking system, you need to pay your capital in, you need policies and procedures, you need to hire staff. Otherwise, you can open for business and we could show up and immediately put you on maybe an enforcement action because you didn't open in a safe and sound manner. So what our current practice is, we make those lists of items that must be adhered to open in a safe and sound manner, like policies and capital, things like that, as part of the application for the certificate of authority. Now, that's what's keeping a lot of people from getting the certificate. It's a lot of work to stand up a bank. And so what this does is it allows them, it gives them the certificate of authority, which then they can then take to potential investors saying, hey, we have the charter, we have the certificate of authority to operate. We can open at any time once we meet these requirements of the commissioner. And so what we'll do is what our current list for the COA application, that's what these requirements will be. We'll take the exact same list and we'll give them that at the same time as the COA, saying, hey, if you want to open in a manner prescribed by the commissioner with compliance with the commissioner, this is what you have to do when you commence business. If they choose not to, they could, then we'll go in for an exam and we'll probably put them on an enforcement action and do other regulatory items. This is probably what we'll do in rulemaking, is outline some of these items, but we do need to make a lot of these company specific. So hopefully that kind of provides a little bit of background. This is exactly one of the asks for this bill, was to clarify what comes first and what requirements to open safely.
Senator Crago.
Thank you, Mr. Chairman. The follow-up would be, I think that all sounds great. We may just have to change the language in section A to clarify that it's not either A or B. There's a third option, which is commissioner can do the following things. I don't know. When I went back and read A, it essentially says the COA is granted or the commissioner denies it and tells them, here's the list of things you have to do before the COA is granted. That's all I was, just want to make sure it's clear between the interplay between A and B is very clear.
Senator, I see the point there. The commencement of business is a different stage, and I think the commissioner is relying on the new language in lines 7 and 8 to allow requirements to be made prior to the commencement of business, but the sentence is almost flipped upside down a little bit, and it doesn't make it as explicit as what Senator Crago is looking for. What are your thoughts on that, Commissioner? Maybe a little more explicit on prior to commencement of business. The special purpose depository institution shall comply with requirements prescribed by the commissioner, something along those lines.
Mr. Chairman, I apologize for thinking like a lawyer, and you're always looking for the loophole, right? I mean, if you're representing one of these banks that gets denied, you're always looking for the loophole. I just don't want us to have any loopholes. That's all. And I might be wrong. I'm just not saying I'm right on this. I just wanted to bring it to everyone's attention that as I was looking at that and comparing it to A, subsection A, which isn't in our language, right? Because we're not changing it, that, it may not. I'm not saying it doesn't. I just want to make sure that we're covering all of our bases, Mr. Chairman. So that's all.
Thank you. Talise, will you note that, flag that, please? Commissioner, thoughts?
Thank you, Mr. Chairman. No, thank you for looking at this. Yeah, could I agree? We want this to be a very clear process with all questions answered before we get to this. So we're not changing the language in 13.12.116A, which I'll just read some of it. If an application is approved and it's granted, the SPDI shall not commence business before receiving a certificate of authority to operate from the commissioner. The application for a certificate of authority shall be made to the commissioner and shall certify the address at which the SPDI will operate, and that all bylaws of the institution are attached and exhibit to the application. It shall identify the officers and directors, and then we will approve or deny that application within 30 days. So that's step one. You get the charter granted by the State Banking Board. You then make the application to the commissioner with these items, the address, the bylaws. I've missed that one before. And then the directors and officers. That's the only thing we could deny that application on, is that one of those 3 items, there's something wrong with it. Once that happens, we issue the certificate of authority, then it goes to B of if you're not commencing business, we're just changing it from good faith to the current language, then it expires. So that's a sequencing of events. If there's a better way of wording that to make sure that, I'm not the lawyer, so if there's other, the lawyers in the room have a better language of how to button that up, happy to hear it.
Yeah, I think the challenge is you are relying on the sentence to sort of be self-fulfilling there, where it's giving you the authority to provide requirements prior to commencement of business within the sentence, the same sentence that obligates them to comply with requirements prescribed. So it's, yeah. Senator.
I mean, I think there's a simple solution, Mr. Chairman,
Good.
and that is to just create another subsection right above, between A and B that says the commissioner has the authority to do blank. And I don't know what the exact language is. And then this says, if you don't comply with subsection, what then would be subsection B. I mean, I would feel better about that. I think that would be much more clear that we're giving the commissioner the authority to impose these conditions between receiving the COA and commencing business. And if you don't meet his requirements, then you don't get to commence business. That would then be an appealable action, which would play in. It would also help clear up some of this language further down the page. So that's just my thoughts, because I had the same thought that you did, is, okay, which requirements are we talking about? Where does the authority come from? Let's just give it to him. Let's give it to the commissioner in its own subsection. And I think that becomes much cleaner.
Okay. Mr. Coffin, what are your thoughts on it?
Yeah, Mr. Chairman. I mean, when we worked this in the working group, it made a lot of sense. So I'm sort of revisiting this language. Now, I'm certainly not opposed to the suggestion. I think it might bring some clarity. My only hesitancy is what language we're forgetting in the SBDI Act already that references the certificate of authority. So I just want to make sure. But I like the suggestion.
Okay. Anyone else want to weigh in on that? All right.
If I'm just to clarify what this will look like, and also I think for Talise, we'll add another section. We'll call it the newbie. And it is the commissioner may issue requirements to what the commissioner may determine what requirements must be met to commence business in a safe and sound manner. Something like that. They will then change this to a C, basically get rid of that section. And then if they don't commence business in meeting the requirements set in B, then it expires. To Mr. Kaufman's question, I think that I don't see any other areas where that might have issues with the certificate of authority. Because right now, let me pull it up. The only thing for the COA is A and B. So I think this is all going to be within that 1312.116. So I think if you all decide to make this, I think I agree. I think it does add some clarity. And I know applicants like that, and I like that. So
yeah, that sounds good. That's good. Good catch. I appreciate that. Any further thoughts on this? All right. Seeing none. Any other questions or any other topics on the board bills for Commissioner Bishop prior to going to public comment? All right. Seeing none there. Thank you, Commissioner. We know you won't go far. With that, let's start by hearing from our Speedy Bank partners here in the state. If hopefully we've got some of them present. Do we have Ms. Fellows from Bankwise available? All right, let's start with Ms. Fellows. There we go.
Hi there. Good morning. As you know, I'm Julie Fellows, co-founder and CEO of Bankwise. And thank you, Mr. Chair and co-chair, and the members of the committee. I'd really like to express my gratitude for your continued support, and notably in creating the Speedy Working Group. The group met multiple times since the last session, And as you see with the bills that have been discussed, I think we had really good output, and it was an effective process. So I really appreciate Representative Filer and Mr. Kaufman and Commissioner Bishop, as well as members from all the speedies working together to present these changes and really help to make the speedies leaders in the digital asset ecosystem. And with that, I stand for questions.
Excellent. Thank you, Ms. Fellows. Any questions from Ms. Fellows? And we appreciate your partnership and your participation in that working group as well. You know, that's what gets us the best legislation, is actually having stakeholders engaged in meaningful process. So good work. Thank you.
Thank you. Thank
All
you.
right. Seeing no further questions, do we have Mr. Rutar from Kraken available? Let's bring him in.
Good morning, Mr. Chairman, Mr. Co-Chairman, and members of the committee. Thank you for the opportunity to discuss this bill. I'll just echo what Julie was saying. The working session and working group was very productive. We took a look at these amendments and thought long and hard about their implications on new applicants as well as existing applicants. And they laid out the amendments pretty well today. I'll just make a few comments on a couple of the amendments. SBDI institutions are already subject to rigorous capital requirements and close supervision. So removing the provision for that 2% additional capital improves clarity. It reduces unnecessary capital friction and enhances Wyoming's competitiveness with the SBDI charter without compromising safety and soundness. So we definitely support this one. And then I'll make a comment on the 3 years of operational expenses. That capital additional creates sometimes prohibitive barriers to entry. And by comparison, Wyoming state chartered banks face a pledge of around $1.5 million. So SBDIs are still 100% reserved. As Commissioner Bishop noted, he has the ability to require additional capital. Anecdotally, Commissioner Bishop noted that the capital ratio is around 7 to 14%. Kraken Financial is around 80 to 85%. So very well capitalized. With that, I'll stand for any questions, but we are definitely in support of these amendments.
Excellent. Thank you, Trevor. Any questions for Mr. Rutar? Seeing none, thank you. And thanks to you also for participating. We really do appreciate it. The working group did an excellent job, and these drafts are supportive of that. I assume you have no concerns with any of the little amendments and tweaks that we discussed of improving the drafts. Is that accurate?
That's correct. Thank you, Mr. Commissioner.
Okay, great. Thank you. All right. Do we have Mr. Parsons from Commercium?
Mr. Chairman, I don't see the Commercium folks online or Ms. Long at
Okay.
this point.
Sounds good. With that, let's go to the room for public comment. Any agencies? I don't think we have any more agencies. All right, with that, open public comment. Anyone want to provide public comment on any of the 4 bills? And as you do so, please point out which bill you want to provide public comment on, or run the list as you see fit. Mr. Meyer, come on up.
Thank you, Mr. Chairman. Scott Meyer on behalf of the Wyoming Bankers Association. We stand in support of these changes to these bills, but I do think that we echo the support and we want to give the support to the change that Senator Crago made on Senate Bill 59. I think that would be very helpful.
For clarity. Okay, that sounds great.
With that, I'd stand for any questions.
All right. Any questions for Mr. Meyer? Questions? Thank you. Thank you for the support. Appreciate having you here. All right. Any further questions? Any further public comment in the room? Seeing no further public comment. Oh, wait, online. I don't think we have any, but okay. With that, public comment is closed. Back to the committee. So, as I mentioned at the outset, we can't actually pass these 4 bills as committee bills at this time, but we can support them and talk about how we want to proceed with them. They'll basically remain in draft after this committee meeting, and then we will transfer them to potentially individual drafts. The first bill is obviously just fine as it is. There was no further objection, so I'd take a motion to support is the way we'll do it. The first draft, 26 LSO 13, if anyone wants to make the motion to support that.
So moved.
All right, we've got a motion. Is there a second?
Second.
Motion is second, and we don't need a roll call for this. Any discussion on it prior to the support vote? All right, seeing none, all those in favor of supporting 26 LSO 13, please say aye. Opposed, no. That motion is carried. With the next three bills, the discussion, Mr. Chairman, that I wanted to have, these have to be run as individual bills. All three of these bills could be put together into one bill, which would be called Speedy Bank Amendments. There's downside to that, which is obviously the aggregation of risk of if anybody objects to any of these points, then we've built it in and we have to work through that. The upside is, which I think is a tremendous upside for the upcoming session, we only have to manage one bill through the process, and we have limited individual bills that we can bring. And we all watched the House last year and how excited they were to even pass bills. So it seems like one might be better. And so I wanted to open for discussion. It would just be taking what we've done here, obviously making the suggested amendments that we discussed, and then bringing these three together into a single Speedy Bank Amendments bill. What is everyone's thought on that? Is that, and obviously any combination thereof, if you feel like one of these bills is riskier and we want to isolate one, we could do that. But I feel like all three of these bills are just sensible, traditional cleanup that shouldn't be contentious.
Mr. Co-Chair.
Go ahead.
Thank you, Mr. Co-Chairman. Well, I'm thinking from my side of things, and as we approach this time-sensitive season in the budget session, it would probably be a good idea to compile these into one bill. I personally do not have any objections to any of the bills that we've had a conversation about today, but I do think that is a good plan. So just wanted to offer my support for that idea.
Anyone object to that approach or have concerns they want to express? All right, seeing none, let's assume we're taking that action as we bring them together. So we have amendments that we discussed. We might only have one amendment that we discussed. Oh, back to Talise, go ahead.
Mr. Chairman, I was just gonna note that the 26 LSO 59 would probably also need an additional amendment, just to amend the Chancery Court's jurisdiction to say that those decisions of the commissioner are appealable. So that would be in 513-115G. It would be a new paragraph just to add clarity that the Chancery Court would have jurisdiction of those types of decisions. It would be a conforming amendment that was missed that probably should be added. And then looking into the discussion that Senator Craigo mentioned about the opting out in 53112A3, it just discusses that a district court judge can assign a case to a chancery court only if both parties consent. I couldn't find a distinction where you can opt out if the court isn't assigning it. But that is something that we can look into further. But the consent was if the district court judge is assigning the case to chancery court. So that is just something for the committee's consideration.
Senator Craigo, what are your thoughts?
Mr. Chairman, so I'm pretty sure, and I was just conferring with co-counsel here, it's in the rules, I believe, it's not in statute, right? And so it's in the court rules that you can file in Chancery Court, and then the opposing party, after it's been filed, has the opportunity to decline jurisdiction within the Chancery Court and go back to District Court.
How would we do we want it to be implemented that way so that if one of the parties wants to go to district court, they may do so? I mean, I'm fine with that, but where's everyone else at? Go ahead, Mr. Kaufman.
Yeah, Mr. Chairman, I mean, I don't think we can get around the Chancery Court rules necessarily.
Okay.
And that was getting back to my suggestion. We could just reference, right? Give Chancery Court jurisdiction on the appeals subject to, right, the Chancery Court rules, which would give someone the ability to opt out if they wanted to.
Mr. Chairman,
Senator Craigo?
and this be a good question for either Senator Olson or for Mr. Kaufman, because I'm not sure. Is there anywhere else where we give original? It's not exclusive because you can't be required to go there, but is there anywhere else where we give, I'm gonna say, original jurisdiction subject to the right of removal back to district court to Chancery Court? Is there anywhere else where we're using that language, or would this be the first place to do that?
I honestly feel like we did it one time over the last few years, but I can't remember where.
Mr. Chairman, same, or at least we've tried. I'm struggling to recall exactly as well.
Mr. Chairman, back to
Senator.
your point about trying to keep these bills as simple as possible and as not contentious. I mean, this is the one place where you're probably going to catch some attention of some of our colleagues. I don't know if you just leave it either or, right? District court or Chancery Court. I mean, you could do, I mean, that way we're making it clear. I mean, you can do it anyways, even if it says district court, right? It's going to fall under Chancery Court jurisdiction according to rules and the Enabling Act sort of for the Chancery Court. But maybe we just use both terms here, and that way it's not an issue, and we don't, you know, raise a bunch of red flags on a bill that we really want to pass that's going to do some good things just for the jurisdiction issue. Just throwing that out there.
It's a good point. And I think that's rational. We change it so that it's is appealable to the Chancery Court or the district court of the county in which the institution is to be located. I think that's and a good point, right? That's less contentious and should be no concern. Talise, do you have that noted? All right, let's go with that. Did we have the concept of the new B on this bill? We'll do that. I don't think we had any changes in the end at the bottom of page 4, did we?
Mr. Chairman, I have a suggested one.
Sure.
Because I still don't think the expiration of a charter and certificate of authority is, I'd rather we have language referencing the requirements imposed by the commissioner under what we're proposing as the new subsection B be appealable, because that's really what we're talking about there. It's not the expiration itself, it's the action of the commissioner that's appealable. You really can't appeal your own. I guess I don't feel if you fail to do what the commissioner has required you to do, you can appeal those requirements. But if you just fail to do nothing, that does not seem to be an appealable action. You're not appealing government action, you're appealing your own inaction, which doesn't make a whole lot of sense. So I would rather we get rid of that language and conceptually talk about the requirements, be able to appeal. The applicant could appeal the requirements placed upon them by the commissioner. If that, hopefully that makes sense to Talise.
Mr. Kaufman, what are your thoughts?
Yeah, Mr. Chairman, I don't have strong feelings about this. I understand the comments and I don't disagree. So if we can come up with some cleaner reference, I do see where Senator Craigo's coming from on the expiration and the non-action aspect. So I don't have any objection.
Okay. Anyone have any objection to that? So we'll basically be referencing back to our new B in some way and providing language that references our new B instead of that explicit language about the expiration of a charter.
And Mr. Chairman, just to follow up, I mean, if there's some reason that I don't understand, because there's a lot about this stuff that I don't understand, that either the commissioner or the rest of the committee has strong feelings about, I'm just trying to make sure that I understand what we're allowing them to appeal, and so that the applicants know what they're allowed to appeal as well. So that's all. And if someone wants to tell me why I'm wrong, I'm happy to hear about that.
Go ahead.
Mr. Chairman, I was just going to clarify. I really think that the intent, at least in the working group, was to just make sure that once these conditions were created and set, right, if the certificate expired, that there was an appeal right. So Yeah, I think I said that as accurately as I can. So I think you're right, Senator. I really do. I think that that's perfectly fine for cleanup.
So I can see an instance where I've got 5 requirements. I'm struggling to meet those requirements. I could request an extension. But let's say that extension is denied. I guess I have the opportunity to appeal the denial of that extension. Let's see, charter for special, the issuance or denial of a certificate of authority to operate. Maybe, do I?
And Mr. Chairman, maybe just to help you as you're working through that example in our discussion, I think one of the things that came up was conceivably from an applicant's perspective, one of the conditions on that certificate of authority they felt was overly burdensome or something like that, right? So they're trying to make it, not that they're doing nothing, they just don't make it in the time
Yeah.
frame or do something, the certificate expires, now what do you do? And so it was, right, it was an appeal right on that. But again, I keep sound like a broken record right now. I agree with Senator Crago, the more I think about it, that if we specify that you're appealing the condition, right, or the time frame of the condition or whatever it was, not so much just the simple fact of the expiration, I think that probably does make more sense.
Senator Craig.
Mr. Chairman, we could also add denial of an extension is one of the appealable rights because it requires good cause shown, and that's a decision made by the commissioner that could be appealable, right? If he says
Yeah.
that's not good cause, that could be appealable, and I think that would then clear it all up. I think that's a good catch that you put denial of the extension as well as one of the appeal rights.
Talise, let's make sure we do that in addition to the conditions. And I think that then takes care of it. Then we don't have to worry about it. You've got a clear remedy available, a path for everything. Okay. Everyone comfortable with all of that? Seeing no objection. Commissioner Bishop nods. We're in good shape. Okay. I think we've got that bill sorted out. Contingency account repeal. I heard no suggested amendments. This is straightforward repeal. Any concerns on the structure of that bill? No. SPDI resolution fund account. We had no suggested amendments. The only question in the staff comment was, do we want to be explicit on the fee amount? I'm inclined to not be explicit. I think we're in good shape going with parallel and leaving it up to rule. All right, everyone comfortable with that? Okay, with that then, I'd accept a motion to combine these 3 bills into one draft and support that draft.
Move that motion.
Second.
Here, a motion, a second. Who made the motion first? Was that Representative Wasserberger? And okay.
Totally be.
All right, well, that is accurate. So we are going with Senator Olson.
Favoritism will not.
That's, I know. I'm chairing today. Okay, any discussion on the motion? Seeing none, all those in favor say aye.
Aye.
Opposed, no. All right, that motion has carried. So we'll end up with 2 bill drafts. We'll circulate that bill draft and we'll make sure everybody has a chance to see it before it's finalized. And we'll work, Mr. Co-Chairman, to figure out who is prime sponsoring these. But we'll have an opportunity for all members then, and hopefully all members will sign on. That's been very effective in the past for these banking bills, where when it's a list of all members of the committee, they've gone just fine. All right,
Mr. Chairman,
go ahead.
I think when we go through this process, I mean, by the makeup and understanding of how the House is, I'm just wondering if, as we go through this, maybe we ought to look at maybe starting this in the Senate.
Yeah, I wasn't going to say that out loud, but
Okay.
that was definitely the plan.
All right. Good enough. Well, you guys should talk to me a little more in the morning. Okay.
All right. With that, let's go ahead and take our break now before we get started with DUNAs. And we'll come back and get started, I think, right at 10 o'clock. So we are on break until 10 o'clock. All right, let's come back to order. Next item on the agenda is a discussion of decentralized unincorporated nonprofit associations. We have a bill draft that we'll be considering that we've been working on some updates and revisions. Elise, if you want to come walk us through, some of which can obviously be at a high level since most of this bill is adding 2 words over and over again.
Mr. Chairman, members of the committee, Talise Hansen, Staff Attorney Elso, presenting Bill Draft 26 LSO 58, version 0.4, unincorporated nonprofit association amendments. This bill draft was a product of the DUNA working group that was formed at the committee's May meeting. So just a high-level overview, this bill draft amends definitions within the DUNA Act, including administrator and DUNA, creates the definition of distributed ledger protocol, and moves the definition of charitable purpose from the definitions section to the DUNA merger section. The bill draft authorizes DUNAs to automatically convert to UNAs if the DUNA falls below the 100-member requirement unless the governing principles specify otherwise. It authorizes DUNAs and UNAs to file a statement of authority to transfer real property in the DUNA or UNA's name in the Office of the Secretary of State. There's a staff comment on this on page 3 that just highlights that throughout Wyoming statutes, documents pertaining to real property are typically filed in the office of the county clerk in which the property is located. Recording these documents in the county clerk's office provides the public notice of ownership changes and protects the interests of all parties involved, including creditors. And the select committee may wish to consider requiring UNAs and DUNAs to record statements of authority in both the office of the county clerk and the office of the Secretary of State if they, just something for your guys' consideration. The bill draft also removes the language or other property that confers upon a person a voting right within a nonprofit association and a couple of statutes throughout because the definition of membership interest already covers this. So the DUNA working group wanted to remove that duplication. The bill draft requires assets of a DUNA to be distributed as required by federal law as well as state law when winding up a DUNA. And the bill draft conforms language in the DUNA and UNA Act by using the term merely instead of solely when referring to fiduciary duties and agency powers of members of DUNAs. There's a staff comment referring to this on page 18 and 19. Which just highlights that the select committee may wish to consider the definitions of solely versus merely. Merely means nothing more than only, while solely means to the exclusion of all else. The Wyoming Supreme Court opined that the use of the word solely referred to exclusivity, but has not opined on the use of the word merely. If the select committee decides that solely is better than merely, then the select committee may wish to consider amending the UNA statute so they both either say solely or they both either say merely. And then the bill draft just makes some other conforming amendments. A lot of those are mostly just changing all the references to DUNA to the full name instead of in some instances it only refers to nonprofit association, and some nonprofit associations aren't DUNAs. So it's just clarifying that in this act, if you're referring to a DUNA, it's going to say DUNA, and it's not going to sometimes say nonprofit association or some sort of combination of that. And I'll stand for any questions.
Excellent. Any questions at this time?
Mr. Chairman,
Go ahead.
that really
Cindy.
felt like a Dr. Seuss book with all the DUNAs and UNAs and.
Yes, it does. DUNA likes tuna. Maybe, I don't know. We could write a book about it. I'll get AI to do that over the next couple of minutes and get back to you. All right. Any further questions? One thing that came to mind just as I was gathering the bill draft, our overall catch title is Unincorporated Nonprofit Associations Amendments. Was there a reason we didn't put decentralized in front of that? Are we amending, is it because we're amending both provisions of statute? Is that the concept?
Mr. Chairman, yeah, the catch title was changed to be a little broader because on page 3, we're amending the UNA by adding that they can file the statement of authority for property that's in the UNA's name in the Office of the Secretary of State, which is also the same change that is made in the DUNA later in the bill draft.
Gotcha.
But since we were also amending an UNA statute, it was advised to make the
Broad.
fetch title broader. But
Makes sense. All right. Any further questions for Ms. Hanson? All right. Seeing none, thank you. Let's go to Mr. Kaufman, and maybe we'll bring up David now and talk about, you know, some of the philosophy behind what we did, more details about what we're doing and why. Come on up and we'll give you a minute to introduce yourself, and then I'll hand it over to Mr. Kaufman to start, perhaps. David, will you get your microphone on? Should have a green, there you go, green light. Perfect.
Indeed. Justin and I both live in Cheyenne. We moved last year after the Wyoming DUNA bill passed. So the company we work for, we started, called Cowrie, basically helps these projects file their tax returns, do their financial statements, carry the administrative burden of how to get the paperwork filed. And so it's kind of we slot in with these organizations to help them be able to meet the compliance obligations that come on the federal and state side for existing as a U.S. entity. And I brought Justin up with me to, why don't you give a quick run through of the DUNAs that have come into existence since the law passed?
That would be great. I know I'm kind of excited about some of them.
Yeah, so Uniswap, named DUNA, was kind of the crown jewel of our initial tranche of DUNAs. Passed a vote. I think it was 55 million tokens to 0. So it was a very clear-cut vote. Community was very excited about some of the protections involved. Very excited about becoming compliant with tax, not having any past unanswered tax liabilities. So that was, again, kind of the one that I think the public took most notice of. We've also had Towns, which is a communications protocol, as well as Syndicate, the Syndicate Network Collective, which launched last week. So those are kind of the first 3, and then we've got a couple more coming here before the end of the year.
Yeah, and Uniswap is obviously absolutely incredible that
was great.
They are here now.
Yeah.
Yeah.
I mean, unfortunately, it does not help the Dr. Seuss thing because they chose the name DUNA. I want to be very clear.
Right.
I suggested Universe. I was overruled.
Uh-huh.
So it's DUNA the DUNA.
DUNA the DUNA. That's still pretty Seussy, and I feel like
Very
we can work
Seussy.
with that. Yeah. Yeah. All right. Mr. Kaufman, do you want to give us kind of maybe a rundown of some of the motivation behind the product, what we're changing in here and why?
Yeah, thank you, Mr. Chairman. So, I mean, I think the primary changes and the impetus behind this bill are more narrow than it seems based on the length of the bill. Just to echo the comments of these gentlemen, our firm's been pretty involved in some of the early DUNAs, just to kind of orient the committee to these projects. So it's usually different, right? Because when we created the Dow LLC, one of the obvious problems, which we're continuing to have more clarity on all the time, including things like the Clarity Act that are, pending in Congress, is how you issue a token and do so in a regulated way or proper or an exempt way. And, one of the big problems and rubs with the LLC DAO that we created was it's still a for-profit entity. And so for a lot of the projects and protocols, they don't want that, right? The old model in the crypto world used to be to go to the Caymans or Switzerland or someplace like that and have a foundation that would be the issuing and governing body for the token and could issue tokens to a service provider, a contract provider to, manage the network or whatever the case may be. So this really truly has created sort of a lightning rod moment for Wyoming where a lot of these projects are now able to use a nonprofit entity that, protects liability from the individual members, right? Creates sort of an entity status. There for a while when we had the scare of the Corporate Transparency Act, it created a workaround for the Corporate Transparency Act. So there was a whole bunch of reasons behind it, but I think as we're seeing in practice, it's far more practical maybe than we even anticipated, that people are really using this for practical purposes to create decentralized projects. And yeah, obviously we all know decentralization is a spectrum, right? And everybody says that. A lot of people have a hard time executing on that. But, getting to the bill, one of the big hurdles that we've seen in standing up some of the DUNAs is we have a requirement in the act for 100 members minimum. And that's usually somewhat of a challenge for initial projects. And so what that has resulted in, and I'd love for these gentlemen to comment on this as well. At least what we're seeing is either people have to start as an UNA and then convert to a DUNA once they reach that 100 threshold, or they have to do some gyrations to make sure that they launch with 100 members. But that number can fluctuate. And so obviously one of the changes that we're asking for here today is at least a little bit of grace here, that if somebody falls below that 100 threshold, that you at least resort to an UNA, right? Not lose your entity status completely. So that was one. Another one is just how these entities are interacting with the rest of the world, right? And we have this concept in the statute for an administrator, which can be someone, right, that is delegated by the membership of the DUNA to interact and do different things. But this has created questions around how do these entities, if they want, register, right? So there's some evidence of their existence, what their authority to do with that evidence of existence looks like. So really, those were a few of the driving points that kind of led this effort. In the process, as you see, there's a whole lot of just minor cleanups along the way to make things read a little bit better. But Senator, I think as succinctly as I can, that's kind of the genesis of this and what we were trying to accomplish.
Great. David?
Yeah. To kind of just go, I wrote a list, so I'll capture them in the best order I can. As far as the 100-member requirement, that was something I think 2 years ago we kind of went round and round on, just to make sure the 100-member felt right. As a theoretical concept, I think we'd all be comfortable if it were 1,000 members. The point of these organizations is that they're large userships, decentralized across massive areas. From a practical standpoint, 1,000 is very difficult. And so the reason we kept 100 and didn't mirror the two is 100, as best as we could, felt like a reasonable approximation of a group of people who would have a hard time meeting in over distance if they weren't using some kind of assistance. So there weren't smart contracts helping. And yeah, we could use email, but the idea behind it was an approximation of the beginning of decentralization. If you were below that number, it's very easy to imagine a centralized entity. And so we were trying to steer towards a push towards decentralization, since that's the purpose of the law. From a specific standpoint, there are a number of grace periods and safe harbors that exist inside the law for 99 or fewer projects. And we wanted to make sure we stayed well on the other side of being able to be an investment club. If you were to combine the DUNA statute with 50 people inside the investment club statute for people below 99 to be able to form an informal organization, those two would not meet well together. We can't prevent them from both being utilized, and we don't really want to see the fallout. So the 100 members keeps us above a lot of the minimum statutory cutoffs for what would be a lot of conflict. So it's also just a pure usability answer. Now, to Matt Kaufman's point about the UNA to DUNA transition, there's nothing easy under the sun. When entities transfer, when they become another type, when they in the tax world, it's a forced liquidation and a reconsolidation. And so whether or not a reorganization is tax-free or not depends on federal tax law for that purpose. We've developed an argument where in most situations, it's very clearly enough equity because of the ability for the value of the treasury upon wind up and dissolution to pass to the token holders. We feel comfortable using something that's called an F reorganization for the UNA to DUNA transition. And so, when we work up the fact pattern, we're comfortable there's not a taxable transaction UNA to DUNA, but there's potentially difficulty there. At the same time, we wouldn't necessarily want a two-person DUNA, and so it does make sense to have when the entities are operating centralized, and that's how these early stage UNAs operate, 3 people will go in, set up the rules, set up the, it should be a reflection of a centralized entity. It is a different set of rules than when there are 100 or more members. So one of the things that I would like to hopefully do is to have this law numbered so that it exists as a subtype of the UNA. So we could be more clear when we describe the DUNA as a subtype of the UNA. We could make clear to the IRS, we're not changing massive entity forms. Under the Secretary of State purposes, they both call them UNPs when they look at them for business entity purpose. We are globally under the concept of an unincorporated nonprofit association. It would be like any number of LLC forms and variants exist in LPs for, you know, different types of trade associations or different type. Like if we could make that a little bit more clear, I think we'd make the UNA to DUNA transition quite a lot easier on the federal side, with what Matt recommended as far as the recommended language for that being an automatic transition unless elected for otherwise. We kind of close the door on how it's getting treated. And then from a functional standpoint, the people in the community, they really never know whether an UNA or a DUNA, because there's nothing the UNA can do that DUNA can't, and vice versa. The DUNA is a little bit more limited, the 100-member requirement, the no distributions, limitations on per capita distributions. But other than that, it was designed so they perform the same function. So banging back and forth between them, it's not like one is able to do something the other can't. Like they are functionally identical in terms of the privileges they convey, and that was by design. So not to go into the arcane, so I apologize for all the back history, but if we were to be able to clean up the numbering so that it was more clearly a subtype of the UNA and not a standalone law provision, and I would argue the Dow LLC would also benefit from that clarity rather than being a standalone provision in the Wyoming law. If it were to tuck under the LLC provisions as subtype, I think that would make its application also more clear. If you go to the Wyoming business codes right now, it's just chronological order of when things got passed. And so when we're thinking about how would someone at the IRS, Treasury, the federal government who's unfamiliar with Wyoming law, would they know that it's meaningless, that it's kind of a smorgasbord? Would they be expecting it to be a subtype as under category from what they're used to seeing? And I think the answer to that would be yes. So it'd be worth making that change. And so that's the 100-member requirement. That's the UNA to DUNA transition. And those 3 are all kind of baked together. As far as the note from the LSO, from the office who mentioned this, the Secretary of State's filing and the county filing, I would probably recommend at this point, we should have that office from the county side speak to the Secretary of State's office. So I think what's important to realize is people are filing the UNA property forms with the Secretary of State. And so there's confusion in the system. And so I think this was a statutory request to say, hey, if they're going to file it here and they're more or less not getting rejected, we should probably be accepting them. But if that creates more friction with the county office, then I think we probably need to put some inquiry into what the better solution than just extending it. So that language that mentioned the Secretary of State accepting the filing was just a reflection of the fact the Secretary of State's office does currently accept the filing in some situations.
So on that point, if anybody has any questions, jump in. You know, this was a point of curiosity for me, is the statutory authority for the Secretary of State to accept that filing. I was curious where that's at.
I think it's a reflection of the fact that they are. And so it was a matter of, if it's going to be accepted, then we might as well make it permissive under the law and not have it be external.
Yeah, it's interesting that they have been, and I'm just curious, and I've looked at Talise. I don't know if we're adding the new language, on page 3, and you've got your staff comment, and then I think it's again somewhere a little further, allowing recordation by the Secretary of State's office, and apparently they've been doing that. And I guess I'm curious how or why they've been doing that. Do we have a sense of that?
Well, I think to classify it from what I've seen, it's that it doesn't get rejected more so than an acceptance, but it's more, I think people in Wyoming don't know where to file. And so they file it there.
Uh-huh.
And then it's a question of, does the Secretary of State destroy it, or do they accept that the delivery at least got done? And so there's not a mechanism for them to actively reject it. So it's kind of this more, I think the people of Wyoming are filing there. And so to say that it's getting accepted would mean it's getting stamped and the Secretary of State saying yes. I think the reality is they get something in the mail, they don't want to throw it out, they have no means of rejecting it. And so it's more a matter of, it just kind of exists in a perpetual state of, if it's going to end up there, what do they do with it?
And Talisa, do you have anything to add? And then I'll get back to.
Mr. Chairman, no, I was just gonna say I haven't looked into what their authority is or if they
Yeah.
have the authority to do that. I haven't looked at it, but we can look.
Have we had conversations with the county clerks about whether they're concerned that they're not getting information that they're expecting?
I haven't spoken to the county clerks about it.
Okay. Mr. Kaufman, do you have any sense of that?
I don't, Mr. Chairman.
All right, that might be something for us to follow up on. That was one where, and mentioning a moment ago, the idea of trying to have a communication, I think that might be appropriate to look into so that it ends up being in both places. The county clerk really should be engaged based on statute in that recordation, I think. All right.
Yeah, in the past year, we've spent a lot of time at the Forms Office and the Secretary of State's office. And so that was more of an add-in just because we were aware that it was happening. So we wanted to just make sure it got brought to everyone's attention to be dealt with. Fun fact, the group who usually does the filing are the national citizens, the naturalized citizens filing their objection to paying tax, or like that's usually who files the file, because the UNA filings are free. And so there's a naturalized person element to it, or that's the wrong terminology. Naturalized would be immigration. Solvent, yes. The solvent person argument, that tends to be a lot of what's driving the filings.
Okay. Let's see. Committee, any other questions for Mr. Kaufman or Mr. Kerr at this point? Go ahead, continue.
I would raise one kind of in line with this Secretary of State filing being done to both UNAs and DUNAs. Right now, UNAs and DUNAs do not charge to exist. They don't file a registration fee. When we file the trade name, it's $100 over a 10-year period. That's nothing. It's $5 to do registered process. But in the Secretary of State's authority for broad form authority, and then also the practice on their websites established, entities in Wyoming are entitled to what's called a certificate of good standing. And so that's just something that the Secretary of State's office will do without a fee, because you've already paid your incorporation fee, or you've already paid your LLC fee. UNAs are technically included in that, even though the information they would be providing would be different than, it'd be more of a certificate of existence than a certificate of good standing. It's different filing requirements. But when people do get that form, they don't pay for it anywhere in the process. And so it would be helpful to have a certificate of existence, but because there's not a registration fee involved, I would suggest that we make it such that the certificate of existence is not free for either UNAs or DUNAs, that because they don't pay a filing fee, if they want to get that certificate, they should be paying an equivalent amount of money to get that certificate. So I would suggest taking that language, and hopefully this session, just to be a revenue driver, we could put in the filing fees, the process. It'd be very minimal because the Secretary of State's office has broad form authority to be able to decide what the form says. So we don't have to make the form for them, but we would have to establish that it could be charged for. Now, the reason it didn't make its way into the draft was because that might be a question for the Corporations Commission more so than the Blockchain Committee. And so, but in terms of how much it would help, I think one of the things that we do notice, having moved to Cheyenne, there's a lot of activity being moved in name to Wyoming, and it doesn't carry with it the economic benefit that you would expect. If you register here and don't move Nexus, you don't bring your team with you, there's no state tax, so there's no real driver. And so I think the areas where we can be cognizant of the fact that the forms themselves provide a value to some people who will never set foot in Wyoming, these projects, there should be a filing and a fee accrual aspect to this. And so I think it's really important that the certificate of standing be a chargeable item and that we get it addressed so that it starts generating revenue for the projects that do adopt the DUNA.
That's a good idea. Yeah. Any thoughts or discussion? Go ahead, Representative Yen.
Mr. Chairman, maybe just a question for Mr. Kaufman on the merely versus solely. Is that something that we actually need to think about, or?
Yeah, that was on my queue also. Let's go to that now if we don't have anything on the previous discussion. Let's go to merely solely.
On the draft.
Page 18. What are we doing?
Yeah, Mr. Chairman, I'm gonna be honest, I don't know that I have real strong feelings about this. Understanding the comments from LSO and the guidance from the Supreme Court opinion. I mean, I think to some extent this is a policy question.
What was the motivation for the change? What are we looking to accomplish?
In our case, it's uniformity between the UNA and the DUNA. I think we took the more modern language in the DUNA, ignoring how the UNA said it, so they're non-conforming. And then I think the recommendation out of LSO was, if we are going to make a change, we should just make everyone be on the modern language. I don't think they came to a conclusion, but it was that the courts have ruled that the solely is definable and have not for merely. So I think it might, the reason we're making the change is right now the UNA and the DUNA say a different word for no reason. So we just want to bring it to being the same word. If that word's solely, if that word's merely, I don't think anyone cares. Besides, the LSO raised the point that Wyoming courts have said one of them was good previously. So it might make sense to just make that the word.
So the implication there and the way to implement the staff comment might be reverting this language that we have on 18 and then drawing in the language from the UNA and changing merely to solely. Is that the concept?
If I had it right, was that, yeah.
Police?
Yeah, Mr. Chairman, the DUNA working group, their drafting instructions to LSO was to change the DUNA Act to mirror the UNA Act, so to change solely to merely.
Yeah.
And the staff comment was just pointing out that solely has been, this Wyoming Supreme Court has said that solely means exclusivity. So if we're saying that you, like reading the statute, a member shall not have a fiduciary duty to a DUNA or to a member, any other member of a DUNA solely, as in exclusively because they're a member of a DUNA.
Yep.
That would be what the Supreme Court would theoretically interpret that statute to mean solely, as mean exclusively because you're a member, that you don't have a fiduciary duty. Merely, the Wyoming Supreme Court hasn't opined on a definition of merely. The definition of merely included in the bill draft was just from the dictionary. So it was just a policy consideration. If you want to mirror them, it was just pointing out that they are different, and the drafting instructions were to change the DUNA.
Understood. All right, so, Mr. Kaufman, Mr. Kerr, and anybody else in the committee, I guess I'd ask, it seems like if we have some court precedent that provides appropriate clarity for the use of the word solely, that we would want to opt for solely. And since we have a broad enough title, it seems like this bill can easily amend the UNA Act, changing the merely's to solely. Is that the appropriate direction?
Yeah, Mr. Chairman, as I mentioned, I mean, I think solely is perfectly appropriate. It does fit with the definition. Again, I go back to say, I think maybe there's a little bit of policy direction in this, committee for discussion on whether or not that's what you want, if it's just exclusive. But if I was picking, I would probably defer to solely. That feels more appropriate to me.
Mr. Kerr?
Same. Fun historical fact, the uniform acts on which the UNA itself was broadly based ping-ponged across this for 40 years. So if you look over their work, it also changes. So there's no clear usage of just, there seems to be a preference at some time. And I guess our preference is as long as they say the same word, we're good.
Right. That seems fair. Attorneys at the end of the table. What are your thoughts? Yeah, Senator Olson?
Yeah, Mr. Chairman, I agree with your statement that if we've got one of the words that's already been interpreted by the Supreme Court, we've at least got some certainty in the statute, and I think that's what folks forming organizations look for is certainty. And ultimately, I just agree with the idea they should just be mirrored however we do
Yeah.
that. So
Okay.
let's do that.
Senator Craig, are you good with that?
Mr. Chairman, I agree. I was just looking up to see what language was used in some of the other acts, just out of curiosity, like the, LLC Act, and I just was pulling that up as we were talking and I didn't get to it, so.
Okay.
I'll report back.
All right, sounds good. Thank you. Okay, I think that is all of our staff comments, if I'm not mistaken. Talise, is that accurate?
Yes, Mr. Chairman.
Okay. So just to clarify a couple of things, charitable purpose that we have on page 29, we moved it. We didn't change it, correct? Okay.
Right. And to provide a little context for that, I think one of the reasons the DUNA was so misunderstood was charitable purpose came so high in the list of definitions that some people thought it required a charitable purpose. That was just a matter of alphabetization. Bad luck for us. C was in front of D, so the very first thing you read was a charitable language. The only time specifically the law mentions the charitable purpose for consideration is on wind-up, dissolution, merger. And the reason for that is that's where the limitations would be if it elected tax exempt status, or if it held itself out as a charity or a public trust, then it would have different rules to follow. So by moving it into that section, it has a definition where it gets used, but then we also avoid the misinterpretation of just the very first thing people reading being a definition of charitable purpose.
Gotcha, understood. Any questions or discussion about that? Going back briefly to the registration concept, since these are not required to register with the Secretary of State, walk through what you're doing right now. It sounds like you're getting a certificate of good standing as your sort of registration, but walk us through.
Yeah, so we wouldn't put a certificate of good standing in because we wouldn't want to put that strain on the Secretary of State's office. The time they've historically done it over the past few years is when a registered nonprofit, who's an unincorporated nonprofit association, has needed to qualify for federal funding, or for whatever reason there was a question as to its legal existence. That form has been typically prepared in that situation for a specific reason. And we don't meet that reason. We were able to get our bank accounts figured out across a different path. What we have been doing to have registration in the business entity, and if you were to look up on the business entity search right now, Towns Lodge or Syndicate Network Collective, those would both come up showing that they had a registered agent on file, that their taxes were in good standing, and that they do meet the requirements for being a DUNA in Wyoming, which is, admittedly very minimal when compared to a C Corp and LLC. That has been very beneficial to us because by being able to point to the business entity search, we've effectively been able to convey existence in the sense that at least the organization's not unknown. And so when we've been working with some of the banks, they prefer, their compliance teams like seeing that it's not just a matter of contractual record. And it also answers the question, I think, that was theoretically asked when all of this started. How would people know this entity even exists?
Exactly.
And so now we have two very clear answers. One, you can just do a search for it and you'll find it. And two, and you'll find its registered agent, so you know how to contact it. And two, the entity itself has a website, and that website has the association agreement on it. It's where members know to meet, to vote. And so the transparency issues that were raised kind of theoretically over the years, we're trying to figure this out, are very much demonstrably not having needed to be worried about. We have transparency in existing in the business entity form, and then we have those websites as well.
Okay, so it seems like that's working sufficiently right now.
Yeah, it takes about 15 days. It costs $100. Uniswaps was fun because we had to reserve it and then transfer it. We had to figure out how to do all of that with the filings. But I can't stress enough how, and I mean this at the staff level, the line associate level of the Secretary of State's office. They are absolutely great about taking a question, running it down, taking the time to figure it out. Now, they can't give advice, right? They can't tell you what to file, but they'll work the problem with you. So when you say, I drafted 2 documents that, are trying to accomplish the same thing, I'm not sure which way is the right way to go. The person behind the desk will disappear into some of the back offices. They'll talk to some folks and they'll come back and they'll be able to provide instruction on what to do. And so just from a tremendous sense of gratitude, I just wanted to get that out and put out to y'all's attention, how good a job they do helping with that kind of administrative effort. And
Great.
so the path to doing the trade name filing was a byproduct of the staff's willingness to just kind of answer questions and be available to kind of work the problem.
Would we benefit, and I don't know that this bill draft is the right place to do it, would we benefit by providing more clarity unambiguously in statute, this is a path to accomplish that objective, or does it seem like we're okay?
I think it seems good. I think if I had one caution and why I would like to see the certificate of existence eventually come into play.
Yeah.
If I were on the bank's side of the compliance team, I think they'd be,
They'd like it.
it's working in my favor that they don't seem to, I think they look at that existence as being worth more than it is. I think a certificate of existence would more appropriately meet the requirements. I think the banks sometimes look at the website with a little bit too much weight behind it. And so I think the area where this could all improve is if we had the certificate of existence, we could start building around the best version of the answer.
Okay, that helps. All right, any more questions at this time, Senator?
No, Mr. Chairman, I just was going to tell you that the LLC Act uses the word solely.
All right, that's helpful. Thank you. Let's get to solely. Okay, Mr. Kaufman, anything else to add at this point before we go to public comment? Anything else before we get to public
One
comment?
quick one, the next time we meet, we're going to have a really fun tally for you for every time in the future. One of the things that we did, like I said, Cowrie joined the organizations to help with the administrative effort, but as our entity, our C Corp, we can't sign the return. We join as members. And so I actually signed the returns. And so we were working the process where what would be the compensation be for the return preparer. And we couldn't be a nominal amount because it has to have, it has to be enough that it actually is worth the review and the signing of the return. And so what we did, because it felt really strange to have a carve off individual payment to me, we're having these DUNAs every time we sign a tax year's return. So a federal return and any other state filings would be one. The DUNAs are going to donate $1,000 to Wyoming charities. We have the website already set up, and then Cowrie's going to match. And so the idea behind that is to start really kind of pushing some of the value accrual, not just on the form filing fees, but also, the good works. And it's really to try to push the benefit for what Wyoming doing the work on the laws has done for the industry. And so for every tax return, we're going to start having those matching donations made, and we'll be keeping track of that on the project level for their financial statements, but also just as a general, where the money has gone and how, much has been done. And so
Wonderful.
Yeah.
I appreciate that. That's incredible. That's an excellent realization from this legislation, is to see that it's directly going to affect positively our communities. Thank you. Anything else at this time? All right, well, stick around. We'll probably have more questions for you as we dig in a little bit, but thank you.
Thank you.
Okay, going to public comment. I think up first we have Mr. Marr. Looks like he's on the screen. Welcome back. Good to see you today. Please, you know the drill. Introduce yourself, and the floor is yours.
Thank you. Can everybody hear and see me?
We can hear you.
Okay, great. Brendan Marr here, MIT Media Laboratory alumnus from 98, not 89, as I said yesterday, making me 10 years older. I am on the, just a little dyslexia there. I'm on the working groups for DUNA and the token digital assets and token taxonomy group, as well as the cryptographic registered agents working group. I would like to speak to the committee regarding 2 actionable items and 2 non-actionable items today. One is a specific language, first and foremost, regarding 1732 102A14 in the definition section, because I do believe this needs to be modified and changed. It's the section where it discusses the definition of a distributed ledger protocol. Means a computational process governing the rules, operation, and communication between intersection and connection points in a telecommunication network. I couldn't really find the definition of a telecommunication network. And the reference to the telecommunication network statute is mostly being repealed, and it does not specifically mention telecommunication network. It talks about telecommunications generally. That's not the right word or phrase to use here. It would be better for us to describe a distributed ledger protocol along the lines of a DLT protocol. And I have very specific wording for that right now when you're ready, but I'll take questions.
Hit us with the language.
Okay, so this comes from, as you're aware, I'm working on the Token Taxonomy Act, and in Article 3 that I'm preparing will hopefully eventually at some point be a general definition section for blockchains and digital ledgers. So that's kind of where this comes from. Eventually, we probably want to move this into that. But here we go. A distributed ledger protocol means a computational process governing the rules, operation, and communication between. That part hasn't changed. That's exactly the way it is right now. And then we go on to say between a network of nodes to collectively propose, validate, and record state changes or transactions across a replicated shared ledger without reliance on a centralized authority. That's it.
Sounds good. Do we already have that somewhere, or is that just in your draft? I was thinking of pulling up the token taxonomy bill or digging it off of my desk here somewhere.
Oh yeah, so it is in my draft. I actually shortened it. It's actually in my draft, and it is under digital ledger technology, DLT, in the definition in section. It should be in that section, Article 3. But I shortened it a little bit. You know, it goes on a little bit further here, but I thought that wasn't really necessary for the DUNA at this point. If you
Sure.
wanted, I could read the rest of it, but
No, I thought that was concise.
yeah, I figured for here, I'll just keep it nice and concise. I mean, the telecommunication network, you know, that's kind of old school. It doesn't really doesn't really get to what these things are. They're not telecommunication networks. Telecommunications are centralized point-to-point communication networks. They're not peer-to-peer distributed node-based networks.
Do you know if do you happen to know, Brendan, what the definition is that's being looked at, assuming that it's in Clarity or RFIA at this point?
It is. I don't have it up handy here. I composed this by doing basically a micro genetic algorithm search on coming up with a good definition. So it's pretty comprehensive. Their definition. Let me see if I can pull that up.
Brendan, I found it. It is what we have in our token taxonomy right now. We've got the Genius definition for distributed ledger in token taxonomy, page 13, Romanet 9. Distributed ledger means technology where data is shared across a network that creates a public digital ledger of verified transactions or information among network participants, and cryptography is used to link the data to maintain the integrity of the public ledger and execute other functions. And that looks like, based on the staff comment, what I think we have in Genius. The definition of digital asset Oh, wait, that's the definition of digital asset. My apologies. Statute, distributed ledger.
Mr. Chairman, that is the definition from Genius.
That is Genius.
Of
Oh.
distributed ledger.
Okay.
But I think the definition in the DUNA is for distributed ledger protocol.
Right. Okay.
Mr. Chairman,
Yeah, go ahead.
maybe a question, why do we need a specific definition for a distributed ledger protocol? I mean, we could also just have a definition for a communication protocol and then, you know, distributed ledger is a type of communication protocol. I'm a little confused on why we need this specific.
Yeah, good question. Mr. Kaufman, why did we add that in the bill draft? Why do we have the Romanet 14?
Yeah, Mr. Chairman, I'm going to defer to Mr. Kirk, 'cause I don't
Absolutely.
recall exactly.
Come on up, David.
Hey, everybody. So the definition was done to help provide the railway for how the law could be utilized. And so we were kind of guessing at what the future would be. And so the idea was if we could provide an example of what decentralized ledger technology was and then interpret it. That's why the DUNA is so much longer than the UNA, as a lot of the provisions are done to simply provide optional explanatory material to show people how they can utilize the technology. And so, you know, I think the decentralized ledger definition was maintained and kept to provide an example of how it could fit into the governing principles, how you could have a vote. You could have a drafted association agreement, but you could also have a vote of these tokens, and both of them would be what defines the governing principles of the organization. And so keeping that language at the time was done to help provide those railways and explanation. It does feel like the times have moved past us. The telecom language didn't come from nowhere either. Vermont had kind of been the first state to kind of grapple with blockchain law changes inside of their municipal code. And so that telecom network was taken from their definition, but it does not aged all that well, I think, in any case. And so an updating for modernity would make sense. And then I think that the digital asset ledger would probably be worth looking at as well for whether or not it does provide that explanatory purpose that it was intended for.
Follow up, Mr. Minority Leader.
Mr. Chairman, I mean, I would also add that distributed ledger protocol has a definition in the Genius Act as well, and this is not the same as that definition, so.
What's the definition? I was looking at our act. I didn't pull up Genius. What is it, Genius?
Mr. Chairman, it is, the term distributed ledger protocol means publicly available and accessible executable software deployed to a distributed ledger, including smart contracts or network of smart contracts.
Mr. Kerr, what are your thoughts on that?
I think either here or taxonomy conforming all of our definitions
Yeah.
to that standard makes sense. I think it would be no trouble to make the DUNA catch up with the times, but I think the larger time for this kind of work would be making sure the taxonomy gets updated across all of them.
Yeah, definitely.
Yeah.
Where do we use distributed ledger protocol in the bill? Are we specifically calling out protocol? I can't remember where, or
Mr. Chairman, it's only used in the definition, as Mr. Mar said, it's only used in the definition of distributed ledger technology. We reference distributed ledger protocol within that definition. That's the only places.
It's a bit of a lady who swallows the flies situation.
Gotcha. Okay. And we don't see that in this bill draft, but it is there. Okay. Understood. That's helpful. Brendan, back to you. Thoughts?
Well, I definitely do concur with David here. I do think it is extremely important that in the DUNA Act, at some point, we clarify this and we make reference to, a protocol, because two reasons. First and foremost, the DUNA as it's designed is fundamentally getting at governance over protocols, right? That's kind of the intent. And this idea, oh, go ahead. I'm sorry.
Brendan, do we, and this is kind of a collective, we have a problem with the Genius Act definitions? Because one of the things we were looking at with token taxonomy is, if the definition in Genius is acceptable, it's probably nice for us to use it. If it's unacceptable, it's okay for us to come up with our own definition. But this is a place where, as a first approximation in this bill draft, we could literally just lift Genius's definition of digital ledger technology, digital ledger protocol, update our DUNA Act so that they're consistent with Genius, and just have that as this bill draft, recognizing we're going to be working on token taxonomy. But at least at that point, we're consistent with something that has been vetted in some way, but it still doesn't get us the full Token Taxonomy Act, which we're going to keep working on. And you know, I'm just exploring options that might create a little bit of consistency. Brendan, what are your thoughts on that approach?
My thoughts are, well, one, I'm going to ask you to repeat the Genius Act in a moment, but my thoughts more broadly are what we actually need, and this is what will go into the token taxonomy, is we actually need another definition, right? What we're doing here is we're kind of taking this idea of a distributed ledger, DLT, and then we're saying, oh, well, we have this DLT and there's a DLT protocol, which is not bad, right? But what we actually need is the other definition here, which is which is the definition that I actually have for the token taxonomy. That is the definition of a protocol. And I'll read it to you just for food for thought here, but it explicitly defines a protocol, communication protocol, or wire protocol, or binary protocol means a programming language or API independent specification used across computing, blockchain, decentralized messaging systems that defines a deterministic set of rules governing how data is encoded, formatted, transmitted, received, processed, and transformed at the byte or binary level to ensure efficient, accurate, and standardized communication. You know, and this, I really want to stress one thing that's really, really important in all this, and I've said it probably 1,000 times, and it'll probably go onto my tombstone, that, you know, this idea of a protocol and its relationship to a smart contract is really, really important, because smart contracts, they describe and specify the rules and logic of tokens or governance or whatever at a programming level, at an API level above, because smart contracts, you know, the way they're currently defined, you know, are basically getting at programs. Smart contracts are programs. When we talk about smart contracts, we should always be using the term smart contracts and or protocols, right? Because they're interchangeable. A protocol is just a specification in bytes. That's what you have with ERC20. It's a specification of what this string of memory means at a byte level, independent of language and language syntax, right? And also, why is all this important? It's important because if you say things and specify things just in terms of a smart contract, then you're saying that you have to be talking about software programming language, and you miss the fact that these things can be specified purely in bytes, like ERC20 protocols or whatever. And the reason why that's important is because contracts and governance can be programmed purely in protocols and not be programmed in smart contracts at a language
Brendan,
level.
hold on a second. So we're in the taxonomy, just that we're in the taxonomy weeds at this point, though, and
Yeah.
that depth needs to go into our consideration for taxonomy. For this draft, we just need two clean definitions. One of them needs to be distributed. What do we need? We need distributed ledger protocol, and we have existing distributed ledger technology. Is that what we've got?
Yeah. If you could read me the Genius Act definition.
Mr. Chairman, if
Go
you'd
ahead.
like. Yeah, Mr. Chairman, distributed ledger protocol, the term distributed ledger protocol means publicly available and accessible executable software deployed to a distributed ledger, including smart contracts or networks of smart contracts.
Yeah, that's okay.
Yeah,
I
and
mean, I would
I mean,
probably try to
exactly. I think
add in the word protocol
I
if you
think
can
that's
there,
what it
but
is.
it's probably okay. Yeah, I
It's
mean,
probably
for,
okay. Okay
for,
is where
for,
it's at. Yeah. Mr. Kerr, what are your thoughts?
I think it's a tough one. I think if the DUNA were better understood, if blockchain and crypto was better understood, then I think what we would be faced with is the decision to strip so much of what's in the DUNA out, because from a functional standpoint, it's not necessary. I think the DUNA took on a communication obligation to be kind of the house of where some of these definitions got
Right.
utilized and to utilize them in a way that makes sense. I think for our purposes, we probably should update those Wyoming definitions so that it reads as best that it can to keep serving that purpose. And we probably should flag a period in time where we expect to see a lot of this language come out of the DUNA when, you know, it's found in a taxonomy. When there's other more robust sources, we don't rely on a singular entity to provide the educational material. There's a better place for it. But right now, I think it still serves that role.
Okay. Well, we can certainly, and I asked the committee and Brennan as well, what you think. We can replace this distributed ledger protocol definition with what Leader Yin just read from the Genius Act. We can also go back into the existing DUNA and update distributed ledger. Is it technology that we have right now? Distributed ledger technology? Okay. So we would update that definition with Genius Act and then recognize that we're still working on token taxonomy. If we end up moving forward with token taxonomy during the session, we'll have to figure out how to conform, which we can do. No worries. But as far
Mr.
as,
Chairman?
yes.
Sorry. This is a discussion that we also kind of brought up in the taxonomy bill, but the Genius definition of distributed ledger only includes public digital ledgers, and the DUNA Act, the current definition of distributed
right,
ledger
yeah, that's right,
technology includes public or private. And so that is an additional policy choice for the committee if they want to switch to the Genius Act definition, or if they also want to switch the definition but add public or private distributed ledgers. And that would also require some conforming amendments, changing taking technology out of some of the references in the DUNA. That's
So much for an easy solution. Yeah, I remember that conversation now. I don't know why
Yes.
Genius went only for public blockchain. That was an awkward choice. Committee thoughts?
You know, we could, the other thing we can do is we could just leave in telecommunications network. And then, you know, in whatever months down the road, which won't be that long from now, eventually, hopefully, we'll just fix it all up, you know? I mean,
Work on a revision.
yeah,
Yeah.
nobody's gonna, you know, nobody's gonna read telecommunication network and think, oh God, you know, this is horrible. I'm
Right.
completely wrong, and I'm liable for something, or you know, whatever. Right? We could just leave it
Well,
in, and then we'll just amend it.
And we can just, honestly, we could just swap out right now distributed ledger protocol for the Genius definition, which doesn't
Yeah,
have
sure.
the problem of public. So maybe that's the quickest and simplest solution. All right, let's contemplate that as a reasonable substitution. Okay. All right, Brendan.
Yeah, a couple minor comments.
Next.
Next
So
comments,
that
not
was
this.
that was your one point. That was
Yeah,
your
that was my
one
one.
point. Let's
That
go
was
on.
that was a hard one. So now we'll get to the easier
Good.
ones. Okay. Yeah. So this is all hopefully this easier. Y- yes. Regarding the 100-member you know, bootstrapping problem. David Keir makes a great point regarding a collision with the investment groups, you know, as he mentioned as an example of 50 members. It's all a problem. I mean, I do think that what will happen hopefully is that as we get the clarity and guidance from the final federal act, that will help guide us here, and maybe in the future we'll be able to change that. What we might want to consider, and this is for future consideration for the committee, is, if things are so clear in that direction, maybe, maybe it's not 100 members. Maybe it turns out to be a percentage, like 20%, but we'll have to see where that goes. That's just for future consideration.
Okay.
The other thing which I think is important is regarding the I can concur regarding the certificate of existence at some point. I think that would be very helpful. We do run into the same problem with series LLCs, which are non-registered for their series children. So eventually, having a certificate of existence of some form might be good. And I think the way
Yeah.
David is put forth, that right now, or at least in the nearer term, let the Secretary of State come up with their own form, and that alleviates us from having to draft something. I had put forth a draft of what I thought might work, but let's let them do it on their side of the fence with their fancy PDF forms. And I think we should come back to that. The fourth item, if I have here, is this is actually, I think, really important, and this is solely for the committee's consideration in the future. What we have, as I see it, is we have the DUNA, which serves the purpose of providing a governance organization for fundamentally control and governance over networks, right? Blockchains, small networks of people and organizations. And it makes sense that it is a nonprofit, because we want to have, those actors involved to be, how do you say, good, to be doing good things, right? If they're motivated by profit, maybe they're not designing the protocol in a way that's necessarily beneficial for everybody, loosely put. It is the case, however, that when we look at all of these things, we have things at the protocol level, which is, the lower stuff. And then we have things at the application level, the higher level stuff. What I put forth for the committee to consider in the future is the construct of a decentralized unincorporated for-profit association. Because at a certain point, there will be a point once we iron out all of these issues regarding decentralization and what the SEC and the CFTC regard as being acceptable in terms of what qualifies as decentralization from their guidance, that we could actually have a for-profit entity for things at the application level. And this would actually be a new form of a for-profit entity that's like post IPO. I mean, but at the application level, and that would be extraordinary, and it would allow for people to join those things, and they would be highly distributed, but they would actually be for-profit. And it gets to the issue which I think many people in the community are struggling with, and David could comment on this further. But there's this, there's the construct of, well, how do you distribute some things to your community members? And the DUNA Act actually gets at that, because you can make distributions. You can't make distributions. Let me be clear. You can't make distributions, but you can provide compensation, which is different.
Brendan, I'm gonna pause you on that one, because I want to stay focused on the bill at this point. I think that is a conversation that we need to follow up with.
Future consideration.
Yeah. Yep. Absolutely.
Thank you for your time. I just wanted to put it out there.
Absolutely. Appreciate that. Thank you, Brendan. Thanks for all your hard work on this.
Thank you.
All right. Any questions for Brendan? Okay. Seeing none at this time. Let's go to, I see we've got, I believe, Tyler Gentry on Zoom. Let's bring Tyler in.
Good morning, Chairman Rothfuss, members of the Select Committee. Thanks for the opportunity to speak today. My name is Tyler Gentry, founder and CEO of NeedAid, headquartered in Mesa, Arizona. However, I was born and raised in Torrington, Wyoming, and for nearly 2 decades, I've worked at the intersection of payments and technology for corporations, governments, and nonprofits. And I want to express my deep gratitude for Wyoming's leadership in digital innovation. Time and again, this body has proven that Wyoming can lead the nation by balancing bold vision with pragmatic safeguards that can truly change the world. During COVID, I worked for a fintech company where I helped government agencies and nonprofits distribute over $3 billion in emergency assistance across several states over the course of 5 years. And much of my purpose moving forward professionally was unearthed because of it. And today I have founded and lead NeedAid, which is a mission-based venture dedicated to building transparent, blockchain-enabled tools to deliver aid and strengthen communities. We have been conducting due diligence on establishing a Wyoming-based DUNA for the last several months, designed to create the first democratized nonprofit fundraising tool on blockchain. We intend for nonprofit organizations to become DUNA members and vote on how those resources are allocated, ensuring funds go directly to residents and people they serve instantly. We envision the distribution of frontier stable tokens and other stable coins directly into digital wallets that can be accessed immediately to support their most urgent needs. With that context, I want to share a few comments and 5 short considerations tied to the working draft. And my comments won't be longer than 5 minutes. First, the definition of member. The draft legislation defines a member as a person, but it doesn't clarify whether that includes organizations. In real-world aid
It does, Tyler. I'm going to
ecosystems-
interrupt you right there, just for clarity, and I'll let you continue. In Wyoming statute, a person is inclusive of organizations, so you're okay on that one.
Oh, fantastic. Yes, NGOs, nonprofits, and community organizations will serve as members, each with 1 vote. 2, member threshold. The draft requires at least 100 members, as we've talked about today. And while I understand the desire for legitimacy, 100 is a very high bar for a proof of concept. Building a coalition of 20 credible nonprofits is often enough to validate a model and can already take months. Requiring 100 could stall innovation. So I'd respectfully suggest lowering the threshold to 20 members, at least for early proof of concept phases, so Wyoming continues to empower innovation while still ensuring accountability. Third, profits and common nonprofit purposes. The draft allows DUNAs to set aside profits for a common nonprofit purpose, and that's excellent, but the phrase needs some more clarity, in my opinion. In practice, profits could generate additional pools, such as profit sharing for members, or even be directed in broader public benefit initiatives. It would be helpful to define what qualifies as a common nonprofit purpose, or what should be excluded to prevent abuse. I also encourage exploring a public-private match mechanism for excess profits that intersect with state interests. Just as the Wyoming Stable Token directs resources to public schools, a DUNA using the Frontier Token could get to its Wyoming 501c3 organizations or NGOs around the world. This alignment with social good would make Wyoming's DUNA framework globally distinctive. Fourth, reasonable compensation. The legislation permits reasonable compensation and reimbursement of expenses to members, administrators, and even external parties. The challenge that I have is reasonable, is undefined. For example, if our DUNA raised $100 million in donations, would allocating 1% or $1 million to administration be considered reasonable? Who decides this, and how is accountability enforced? Consider also, what if a Wyoming DUNA had a windfall of monetary gains of the likes of a Tether which reported $13 billion of profit according to their Q4 2024 attestation. What are the consequences if the reasonable line is crossed? As a side note, Tether is actually an excellent example of exactly the kind of donors we envision funding our DUNA, because efforts like this support their mission to drive financial inclusion and innovation worldwide. We're also activated in the digital asset ecosystem and leveraging blockchain to provide a transparent record of who received aid, when, where, and why. The DUNA will ensure that. Unlike traditional foundations or donor-advised funds, tracking is sometimes lost, and funds desperately needed right now in the world are locked in investments. DUNA members would vote, and distributions would occur instantly and transparently. Wyoming's DUNA law could set a higher bar by providing clear guidance on reasonableness, whether through disclosure requirements, benchmarks, or nonprofit standards. And fifth and final, I'll leave you with Wyoming as the global standard of social good. The broader opportunity is this: Wyoming can make DUNA synonymous with trust, transparency, and giving in my use case. Just as the Wyoming Stable Token is tied to supporting public schools in Wyoming, DUNAs could be tied to fueling community good, locally and globally. This legislation is more than just another legal entity framework for DeFi. It is about establishing a framework where digital innovation and social responsibility walk hand in hand. In closing, thank you again for your leadership. By refining definitions, clarifying thresholds, and anchoring profits and compensation in service to the public, Wyoming can once again set a global precedent. I'd welcome the chance to continue contributing as this framework develops, and I thank you for your service and your vision. Again, my name is Tyler Gentry, founder and CEO of NeedAid, and I have to mention, proud University of Wyoming alumni. Go Pokes.
Go Pokes. Thanks, Tyler. Any questions for Tyler? Questions for Tyler? On the reasonableness standard, I would like to hear a little thought on that. David?
Yeah. Fun fact, I grew up in Mesa, Arizona. And then I went to Arizona State. So Tyler and I are just
You swapped a little bit.
Yeah, 180 degrees trading places. For the reasonable standard, that's a term of art. And so what you find in those situations is if you try to get too technical and too granular about how you define it, you actually lose track of it. And so reasonable compensation is an often utilized standard for tax purposes, for compensation and related to charitable purpose. And so we fit within the statutory interpretation of that. And so you establish your facts and circumstances around what your situation is. You identify compensation structures, both external and internal to your organization, whether that makes sense. And that would be your defense for reasonableness. And so at the end of the day, massively large salaries, even inside of nonprofits, tend to be one of the ways in which people pay themselves a lot of money when they're in that space. And putting caps on it would be great. Historically, I think we've tried to do it in the industry of tax a few times, and there's always another lever. There's always a consequence that's unforeseen. And so the reasonable standard, I think, it'd be great if it was more clear, but I think it's a workable standard that we've come accustomed to utilizing across multiple industries.
Understood. Thanks. Mr. Kopp, anything to add on that?
No, Mr. Chairman, I really appreciate the comments.
Yeah.
I completely understand where, Mr. Gentry's coming from on that. Similar to Mr. Kerr's comments, the LLC Act and the Business Corporation Act, we use phraseology like that similarly to create, again, a workable standard. So I'm open to further discussion on that, certainly, but I agree that the existing reasonable language is workable and has been, at least so far in my experience.
Excellent. Thanks. Thank you so much, Tyler. Good to see you. Appreciate you.
Good to see you guys. Thank you.
All right. Any other public comment? Let's go to the room at this point. Come on up. Do we have any other online? Okay. Good to see you. The floor is yours, and please introduce yourself once again.
My name is, excuse me, my name is Dave Rowland, with Advanced Intelligent Networks. Just replying to, it's kind of obvious, especially with a group that's has blockchain in their name. Distributed ledger is essentially just a fault tolerant system. How you get that fault tolerance in terms of redundancy, you use miners to mint coin and and so the issue to start off with is there's more than blockchains for distributed ledgers. One of the things being a directed acyclic graph, I'm not sure how to phrase it, but the issue is that to stay away from protocol, because every method for the digital or distributed ledger is going to have a different means of whether it be gossip or something else that's going to keep multiple versions in sync for consensus. And that was just, I wanted to make sure that was emphasized that this is, you know, the blockchain isn't the answer to everything. It works great as an immutable ledger. It's great to financially incentivize the whole idea that everybody's going to have 1 million of them. But the success with DAGs, these graphs, drops out huge amounts of energy use. And so that's being done by, I think, IOTA and Hedera and a couple of others that are actually doing pretty much no transaction fees just because they've worked around a different way than having miners do everything. And so just as a thought, stay away from protocols. If you can do it, keep it to technology. I agree with that. And so anyway, that's questions.
Any questions for Mr. Rowland? Very briefly on, you know, we were adding the definition of distributed ledger protocol to page 6 of the bill because that comes up in our distributed ledger technology. And I think the suggestion that we had at this point was to utilize the Genius Act definition of distributed ledger protocol. And it sounds like you're concerned with us taking that approach.
It's just the word protocol. Technology would do it. Just the problem that there's multiple protocols. And if you've ever implemented it and it says we have to use this and it doesn't sync with the other technologies we're using, you're hosed. You've got to implement exactly what Genius set up or whatever, you know, especially if you specify a protocol. And so
Well, there isn't a specification of a protocol in the Genius Act. I mean, I think it's broad language, but it is the use of the language digital ledger protocol. Mr. Curry, you look like you wanted to help out here.
Yeah, Mr. Rowland inspired me. This morning, I came in wet, a little late. So, I phoned in a little. The real answer for how the bill was designed, the longer, harder to grasp and just get into. The bill was designed to be technologically agnostic. It was designed to make these kind of hard choices in definitional language. And so I think it would probably make sense to do a review of how we're utilizing the language, see how it's aged, and just try to capture it all in a net to make sure. When we drafted protocol, it was designed in a very general sense of the word. It was trying to make it as broad as possible for what could utilize this technology and what could utilize this legal entity form, and not putting any requirements on what form. Like you could do a DUNA with some very well-trained carrier pigeons. That was always kind of the gold standard. Like the way the information shares was not technology requirement. If because of the evolution of the terminology, some of that's changed, and I think very well it may have. I didn't do a close review when I was looking at what needed updated to Genius and Clarity, because when I did the review, they were much farther along. I think we've heard enough feedback that the confusion is getting out, and so I think doing a definitional test to make sure our intended purpose comes through would be good.
Sounds good. Mr. Rowland, anything else to add? Thank you. Appreciate it. Okay. Any further public comment? Please join us. Please introduce yourself and the floor is yours. Welcome.
Thank you for having me here. I'm Aaron Edwards. I am located in Seattle. I'm a founder of AI-oriented technologies, And I just wanted to share with, first of all, let me thank this committee. Let me thank the state of Wyoming for all this effort that's been put into blockchain and future technology. That's the specific reason I'm here. And I just wanted to give the committee some ideas on where I think this technology is going to go and what it's going to be used for and what the DUNA Act is going to be used for potentially in the future, to also just put into consideration for the future. Not a lot of the comments that talked about technology versus protocol, I agree with, but I think we're against the time, so I'm recognizing that. So I work specifically on networks and marketplaces where companies come together and want to exchange prompt engineering prompts, the text, in an encrypted blockchain methodology. And that is going to be a form of asset in the future, I strongly believe, that people are going to be exchanging for good value. So one of the things about the nonprofit element, which was also noted, I think will become a barrier for that sort of use of this form of technology. I actually don't view, excuse me, blockchain as being a particular barrier, because I think the blockchain element specifically, without specifying the implementation, is fine. But I just wanted to put in front of you, and you know, I will be available separately, and I know we're against the clock here, in order to explore that area, because I think it's the state of Wyoming has been very high center on the cryptocurrency, and I see a future in AI technology specifically, and specifically around prompts and sharing and control and management of prompts. So with that, I'm just going to stop and take any questions, or I can take them offline.
Thank you, Mr. Edwards. Appreciate that. Any questions for Mr. Edwards? And we obviously have been beginning to engage in AI. We've worked it for the last couple of years and a little bit again this year. So we'd value that discussion to see what we should be looking at as we start moving into AI realm and governance. Thank you.
I'm here for the whole conference, so
Excellent.
I really appreciate the state of Wyoming doing this work.
Appreciate that.
All right,
Thank you so much. Any further public comment at this time? Further public comment? Anyone online show up? Seeing none, public comment closed. Back to the committee. What's your pleasure, Mr. Chairman? What do you think? We could pass this one out today with a couple of amendments and be done with it, and then recognize that we'll probably have some follow-up work on maybe definitions later.
Mr. Chairman, I would agree. We should probably just hash out these amendments then and see what we can pass today.
Let's ask for a motion then. Motion the bill.
Move the bill.
Got a motion. Is there a second?
Second.
Yep. Got a motion and a second, Mr. Co-Chairman and Leader Yin. Let's walk through the bill. I know there were a couple of suggestions for changes. Any amendments on page 2, page 3, page 4? Go ahead. Go ahead. Oh, sorry, Mr. Coppin.
Thank you, Mr. Chairman. I have a proposed amendment on page 4, line 4, the definition of administrator.
Okay.
This is something that Mr. Kerr and I have briefly discussed, but I think, you know, we're re-restricting the definition of an administrator to only be a member. My corporate legal brain tells me, I mean, we don't require, right, that of LLCs or directors. This is a slightly different concept, but my proposed amendment would just be to change that so that it's either a member or a non-member. So I wrote the language down if you want me to read it,
Please.
Mr. Chairman. Yeah. So administrator would mean a person, whether or not a member, authorized by the membership, and then leave the rest of it the same, of a decentralized. I think that just makes it a little bit more clear, Mr. Chairman, that administrator can be a member, is not required to be a member. We're otherwise keeping in the authorization by the membership. Personally, I don't think that word vote needs to be there. I think as long as the authorization is there from the membership, it doesn't need to be required to be a vote. So just minor cleanup there, Mr. Chairman.
So administrator means a person, whether or not a member, authorized by the membership of a decentralized, unincorporated nonprofit, et cetera.
That's exactly right, Mr.
Yep.
Chairman.
Does everyone understand that? We've got a motion and a second on the amendment. Any discussion on this amendment? Talise, do you have that? Okay. Discussion, seeing none. All those in favor say aye.
Aye.
Opposed, no. That motion carries. Other amendments on page 4, Senator?
Mr. Chairman, back to page 3.
Back to page 3.
Sorry, I didn't get to
No
the
worries.
quick enough. I just thought we should at least have the discussion
Yep.
on Secretary of State or the county clerk. And obviously it's in 2 places within the bill, but
Yep.
the first place is on page 3. Because we are talking about real property, I think of, for example, trusts, right? It's very similar. If you have a trust, the certificate of authority or certificate of trust gets filed in the county clerk's office, not the Secretary of State's office. What's that? Sorry, recorded. Yes. I have no problem with it being in both, but I do think it at least needs to be in the county clerk's office. I don't know if it has to be in the Secretary of State's. I think we're open for discussion. So I think either we need to change the or to and or remove the in the office of the Secretary of State. I don't have a particular, for now, I would move that we replace or with and at least for purposes of discussion.
Okay, we've got a motion to replace or with and. Is there a second? We've got a second from Senator Olson. The one concern I would have with that, and this is just a kind of a question, it seems that recordation in the office of the county clerk is sufficient in and of itself. If you add an and, it is no longer sufficient in and of itself. I think your intent is that the A always happen and the B may happen. And that's not what the and is going to do. What are your thoughts on that?
Mr. Chairman, I don't disagree with that. I don't actually think we need or in the office of the Secretary of State. I think filing it in the county where the real property is owned, I think the current statutory language is just fine. But again, I come to this committee with, I don't have the experience that the rest of you do in this particular area of the law. So there might be things I don't understand. And so I was just leaving that open for discussion.
Yeah.
Personally, I think in the office of the county clerk is just fine. But again, that's why I wanted to bring it up for discussion.
It's a good point. Thoughts on that? An alternative, and I think and breaks it, candidly. I think the motion breaks it, but I think the discussion is a good one, whether we want in the office of the Secretary of State. My understanding is that that's what's happening now, whether it's the right thing to do or not. Mr. Kerr.
Yeah, as the one who brought it, I certainly agree with Senator Grego on, I was just trying to bring something up that was happening and just trying to put an umbrella around it so everything got kind of smoothed out. But I think the reality is maybe it just needs some inquiry between how the process is working. But if we were to then make it an and or even an or, you can imagine it might have a unintended consequences of the Secretary of State getting flooded, the county not having the records. And so
Yeah.
I think just deleting it entirely for more review
Yeah.
might be the best of all the options.
Okay. Senator Craigo.
And Mr. Chairman, just to point out, it can be what the current language says may be transferred when a statement is recorded. Well, that doesn't have to happen until the actual property is being transferred. And so it's not like you have to go file the statement right now. Now, typically most of us, when we're doing estate planning, do that because you can't transfer the property according to law without that. For example, when we're doing trust, but this just says at the time of transfer, really you could, if you're using a title company, they're going to say, well, we need to fulfill the requirements of 1722-105, who's signing. So I think the language as it is now in the statute is probably fine. I don't think we need to, you could continue to file that in the Secretary of State's office, but when the transfer actually takes place, you would then do it. Literally, you could take the statement that was already filed in the Secretary of State's office, record it at the county clerk's office at that point.
So, Senator, are you inclined to withdraw your motion and then make a motion to restore the original language on page 3, page 9, and anywhere else associated?
I think that's a great idea, Mr. Chairman, and I so move.
Okay.
Withdraw and move.
All right. Is it okay with a second?
Absolutely not. We need to vote on, no, I'm just kidding. Yeah. That makes more sense to me. too.
Okay, we've got a new motion and a new second on that with the same folks. To restore initial language. So this is on page 3. We're basically reversing in the Office of the Secretary of State, going with the original language. I know it's on page 9. Is it anywhere else? Is it 2 places?
Mr. Chairman, it's just in those places, but I will note that uh, the UNA Act in A says transfer of the property would be recorded, and the DUNA Act says transfer of the property will be recorded, and that is another instance where the language is slightly different. Just bringing it up for purposes of we were trying, I think the DUNA working group was trying to make them the exact same language, just to flag that if you're gonna delete it, you might want to just consider that. That's all.
Oh, so mirroring the language in the UNA, use this opportunity to change, is it would to will? Is that what you said?
Mr. Chairman, currently the DUNA Act on page 9 changes will to would to mirror the UNA Act.
Oh.
It doesn't really matter each way. It's a policy choice for which words you guys want to choose. If you want to leave them as they are, that's also a policy choice, but I just wanted to flag that was also a change made.
Understood. Is that a friendly amendment? So to mirror the UNA Act by leaving the would, the change on page 9, changing will to would as just a conformance with the UNA?
Mr. Chairman, I don't know if we have to do that because it's already done within the bill draft. Is that right?
Mr. Chairman, it was just the motion was to basically delete page 3, lines 2 through 12, and to delete page 9, lines 2 through 10. But I am just bringing up that if you want to keep the would change on page 9, line 8, changing will to would, you might need to slightly amend your motion.
So amended.
Okay.
Friendly amendment. Yeah.
Sound good? Second, we good? All right. Any discussion on this amendment? Questions called. All those in favor say aye. Those opposed? That motion has carried. Okay, we did page 4, page 5, any amendments? Page 6, any amendments? Representative Yin.
Mr. Chairman, let's replace lines 20 through 23 on page 6 with the language from the Genius Act, but remove the publicly available and accessible part of that definition, if that's okay. If that makes sense to Talise.
Talise? You understand that?
Mr. Chairman, just to clarify, taking the definition of distributed ledger protocol from the Genius Act and putting it in here, that did not include the difference between public and private distributed ledger, just to clarify. Yin's.
Representative Yin, go ahead and clarify.
Yeah, Mr. Chairman, so it looks like I mean, maybe I'm just looking at the wrong text, but it looks like it has the words publicly available and accessible within that protocol definition.
So we would want to remove publicly available or accessible because we're using all ledgers. Yep.
Correct.
Talise?
To make it
understood?
more inclusive.
Okay. Is there a second?
Second.
Okay. Representative Filer seconds. Any discussion on the motion? Seeing none, all those in favor say aye.
Aye.
Opposed say no. That motion is carried. Anything else on page 6? Seeing none, page 7. Page 8. Page 9, we already amended. Anything else? Page 10, 11, 12, 13, 14. Go ahead, Mr. Curry.
13 would be kind of where I was looking at possibly drafting on the engagement, or sorry, the certificate of existence. It would be if you appointed an agent to receive service of process, because that's optional. We want to encourage it as much as possible. So if you don't have a registered agent, you're not entitled to get the existence certificate. Kind of made sense. That would be the place I would probably slot on the ability to put the certificate of form available and the cost. That was where I was considering it. So that's probably a little half baked for this proceeding, but I just wanted to call attention to it as we were passing through. That would likely be the process that I had envisioned for adding it.
appreciate that. I think if we move this along and sponsor it, let's do that by amendment in committee, in the first committee, I think would be in order. So let's work up the language for that. I think it's a good idea. Any concerns with that? All right.
Mr. Chairman, that's my preference as well.
Okay.
I don't know what the precedence is on putting revenue generation in a bill that didn't have it, and if it started in the second chamber. Does that make sense?
Yep, absolutely. We can definitely add the requirement, but honestly, adding the revenue would be a big deal. So that's a good point. So as we do an amendment, I don't think it would be any challenge to amend it so that you can get your certificate of existence. But the moment we put $1 on it, it changes the game. So we'll have to talk about that during the session. You're absolutely right, Lyrian. Yeah. Senator, anything? Okay. All right. Anything on 14, 15, 16, 17, on to 18? I think we had some.
Mr. Chairman.
Go ahead.
Yeah, I'll make the motion to strike these changed language and insert the DUNA language and change that to solely.
Okay. Is there a second? We've got a second from Mr. Co-Chairman. Does everyone understand the amendment? Yes. Any discussion? We've already been through it. Seeing none, all those in favor say aye.
Aye.
Opposed, no. That amendment has carried. Talise, you know just what's going on there, right? Okay. Anything else on page 18? 19, 20, 21, 22, everything else is conforming. 23, 24, 25, 26. Any other amendments in the bill? Everything else conforms. Seeing none. Discussion on the bill? Is there any discussion on the bill? Go ahead, Senator.
Mr. Chairman, and I'm not proposing any changes today, but we may between now and as we're working on a couple of these other amendments between now and session, I think we may want to look at the definitions of distributed ledger and ledger protocol based on all the discussion today. And there might be a reason to actually adopt some of the Genius Act, both of those definitions with our own changes to just get it into Wyoming language, especially on the public and private, because as we start talking, which I don't understand a lot of how it works, obviously, again, new to the committee, but I could see there's a huge benefit to maybe looking at those. And again, we could do that. They're not huge changes, and we could do them in committee as we go
Agreed.
forward.
Okay.
Thank you.
Yep. Thank you. Anything else? All right. With that, let's go roll call.
Mr. Chairman, this is a roll call vote for 26 LSO 58, unincorporated nonprofit associations amendments as amended. Senator Crago?
Aye.
Senator Nethercott?
Excused.
Senator Olson?
Aye.
Representative Filer?
Aye.
Representative Wasberger? Representative Yin?
Aye.
Co-Chairman Singh?
Aye.
Chairman Rothfuss?
Aye.
Mr. Chairman, we have 7 ayes, 1 excused.
All right. Great work on that. We're running up close to lunch, but it would be good if we can get data privacy close to done ahead of lunch because we've got a ridiculously busy afternoon. Mr. Co-Chairman, we've worked that bill several times. So let's pull up data privacy, government entities, and start our work on it. Talise, you want to give us a super high level on this? I don't think we changed anything.
Mr. Chairman, members of the committee, Talise Hansen, Staff Attorney LSO, presenting Bill Draft 26 LSO 12, data privacy government entities. This bill draft was considered at the May meeting, and it's the same version from the May meeting. So the brief high level is that the bill draft prohibits government entities from purchasing, selling, trading, or transferring personal data without the express consent of the natural person whom the personal data references unless an exemption applies. The bill draft outlines 4 exemptions, and the bill draft also allows Wyoming residents to request copies of their personal data from any government entity maintaining it. And it requires government entities that collect or retain personal data to adopt, enforce, and maintain policies regarding the collection, access, retention, security, and use of personal data consistent with all applicable federal and state laws. And it prohibits government entities from collecting or maintaining more personal data than is reasonably necessary for the performance of the government entity's lawful functions. It prohibits government entities from maintaining personal data for longer than 3 years without a written policy identifying the extended retention period and providing a reasonable justification for the extended retention period. And that is a very brief, high-level overview.
Perfect.
I'll stand for any questions.
Thank you. Any questions, committee for Talise? Any questions? Thank you so much. Okay, let's get to public testimony. One thing, do we have any county clerks providing testimony today? I don't think we do. Okay, then I'll note, we did have a meeting since last time because that was one of the issues that came up was title agents concerned about whether this had any problems with county clerks being able to utilize public records. We had a great conversation with the Clerks Association and a few clerks, and there was general agreement that they could do all of their work with this in place and that this did not present any challenges for title insurance, title transfer agencies, anything else, so that the standard workflow can go on. So I just wanted to present that we did have that meeting as we promised at the last meeting, which is one of the reasons why we carried this over to this meeting to ensure that we checked in with the clerks and didn't have that problem. So I'll pause there. Any questions on that topic? Okay. With that, let's go to public testimony. I know we have one by Zoom if Mr. Wood is available. Okay. Let's bring in Mr. Wood. And Mr. Wood, I'll say that we are short on time, and we have heard from TechNet on this bill a few times before, so let's hit the highlights and try and focus on 2 to 3 minutes if you can, sir.
Yes, sir. Yes, sir. I will try to be very brief. Good morning, as it's still morning for just a few minutes there. Mr. Chair and members of the Select Committee, my name is Andrew Wood, and I'm the Executive Director for TechNet Central Region. TechNet is a national bipartisan network of technology CEOs and senior executives that promotes the growth of the American innovation by advocating for a targeted policy agenda at the federal and 50-state level. TechNet's diverse membership includes over 100 dynamic American businesses, ranging from startups to the most iconic companies on the planet, and represents 5 million employees and countless consumers in the fields of information technology, artificial intelligence, e-commerce, the sharing and gig economies, advanced energy, transportation, cybersecurity, venture capital, and finance. Thank you for the opportunity to testify virtually on the Data Privacy for Government Entities Bill draft under consideration. We appreciate the thoughtful work of the Select Committee on this topic. TechNet supports the bill's goals of strengthening resident trust in how government entities collect, use, secure, share, and retain personal data. However, we urge the committee not to move forward with the bill in its current draft. In the absence of a federal standard, state lawmakers should look to interoperable, comprehensive legislation already passed in other states to build on the unified standard that already provides a strong privacy protection to more than 100 million Americans. Additionally, the current bill draft's limitations with exemptions on a government entity ability to purchase, sell, transfer personal data could create confusion about access to public records information for legitimate purposes, business purposes. For example, government records are an important source of information for identity and fraud protection. Moreover, many applicable federal laws which regulate the disclosure of personal information already allow for permissible uses as provided by the authorizing statute. As drafted, Wyoming's government entities could encounter unintended consequences with performing services which require disclosure of such information pursuant to those federal laws and regulations. Lastly, privacy laws should not unduly hinder government use of third-party data, which is often an integral component in providing effective and efficient government service. Government agencies depend on the private sector for data, tools, and services to support the delivery of services and benefits to Wyoming citizens. If the Select Committee were to move forward with the bill draft, then it would need some work to address those potential unintended impacts, such as including specific use scenarios for government agencies that would not be affected by this bill, and providing those exemptions would also align with what other states have passed in their comprehensive data privacy laws. Thank you for your time today, and I'm available if there are any questions.
Thank you so much, Mr. Wood. Any questions for Mr. Wood? Any questions? Seeing none, thank you, Mr. Wood. Additional public comment. Looks like we've got some from the University of Wyoming. Come on up, introduce yourself.
Thank you, Mr. Chairman. Mike Smith with the University of Wyoming. I'll be very brief, neither for or against the substance of the bill, but just want to note that during last session, when the university submitted its fiscal and administrative impact analysis, we identified a fairly significant administrative impact. Just our current banner system isn't designed and focused on the deletion, the regular deletion of data. It's actually designed for the opposite. And we estimated that administrative impact at around 800,000 to revise that banner system. And I just wanted to note that for the record, and would be happy to continue discussions with the committee and developing, strategies to address that as the bill moves forward.
Appreciate that.
Thank you.
Thank you so much. Any questions? All right, seeing none, thank you. Additional public comment. Come on up, please join us. And for the sake of how we proceed, please introduce yourself again, although we know who you are.
My name is Dave Rowland. Everybody has something that's going to try to produce, protect the data for individuals.
Closer to the
And-
microphone, Dave. if you
sorry.
would. It-
As I was
there-
going through a lot of the statutes, I came across, as you clarified, that the term of person includes both constructed, LLCs, whatever else, and natural persons. This, however, doesn't protect businesses. This is about personal data. This is about residents. It talks, in fact, that even, what section are we here? Page 4, specifically, line 10, quotes at 81-102, which specifically refers to person, not the next one down, which is about the entities. So that was the biggest thing that I saw, was that reading through this prompted me to do a presentation, which you can deal with now or after lunch or whatever, for testimony. But that was the only thing that I came across, is that this is very specific about preserving people, not necessarily businesses. I've raised questions in terms of what happens when it goes to a registered agent and they get hacked. You got big problems. So, this is the idea. It says how we handle data that's personal, that's business, that's, anything is going to, and especially with the BOI from the FinCEN is, CTA, it's just, there's going to be all kinds of problems. So I would like to see this clarified, rather than just go through and say, yeah, well, we're going to protect the people. Yeah, what about all the other data? So-
Right. Any questions for Mr. Rowland? And I'll just note, this is definitely specifically written for natural persons
Right.
as a protection. And there will be complexity associated with that, but if you want to make it even more complex and challenging, start to include corporations. And we've had that discussion quite a few times on this committee of how can we provide protections for corporations. So this is a slice of what probably is a bigger necessary policy, but even with this slice, there are challenges. So that was the way it was drafted, and it was, we worked this bill last year as well. This isn't the first year we've done it. It was regrettably, I think it just languished in the House, if I'm not mistaken. It ended up on general file and didn't rise up the list. So,
Do you want me to,
if you can hit us with about 2 minutes, that would be great, because I did want to conclude before lunch with this bill.
page and a half?
If it's
Could
2
be
minutes, a
5.
page and a half.
I could, well, we'll see.
Highlights.
English is my second language. Sorry. Good morning, Mr. Chairman and Select Committee. I'm David Rowland, representing Advanced Intelligent Networks, a Wyoming-based engineering consulting firm. I'm advising Wyoming's Wadir LLC on developing a decentralized, self-sovereign identity and escrow product. I've contributed to national ISDN standards with NIST. I've proposed a national network design for Rwanda's government, and I've developed an AI-driven cybersecurity application that has analyzed millions of incidents and is currently monitoring approximately 70,000 malicious agents across 40,000 networks on the internet worldwide. In 2019, as my corporation began producing and selling a personal privacy product, 4 commercial banks abruptly debanked me and us, canceling 7 lines of business and my family's personal credit within 3 weeks, despite no negative reports on my business or personal accounts. I ask you, what level of administrator has power over 4 commercial banks, and what path was used to shut down my wife's and my credit cards, other than the beneficial ownership information demanded by FinCEN? In 2020, 2 crowdfunding campaigns were canceled, and every product and business page, including administrators and family, have had their pages and accounts deleted from social media. Being privacy conscious, I was horrified last year when the Financial Crimes Enforcement Network was attempting to pierce the corporate veil with the Corporate Transparency Act by requiring the BOI. And they're back again this year with the Real Estate Act, which goes into effect this December. For the past 10 weeks, I've been studying Wyoming statutes to understand the roles and limitations of registered agents, notaries, business structures, regulations, and banking policies to develop a competitive alternative to traditional merchant services for micropayment transactions. After domesticating 2 companies and establishing 5 more in Wyoming this summer, I engaged with banks and credit unions to set up business accounts, uncovering Wyoming's personal information collection requirements for Real ID and FinCEN's Bank Secrecy Act. This process revealed multiple obstacles to creating a non-reputable, GDPR-compliant, decentralized self-sovereign ID. Concerning 26L12, I recognize the importance of safeguarding personal data from breaches, sales, or distribution. However, I identified conflicting definitions, and we just talked about that a moment ago. Although Wyoming is a non-reporting state, registered agents are required to maintain points of contact, bylaws, and operating agreements, which often include membership data. A data breach at a registered agent, like those in Sheridan, could expose thousands of trusts and family LLCs. President Trump and Secretary Gray have advocated for a U.S. citizen voter ID, yet the state accepts proof of residence from easily falsifiable or reputable sources. Wyoming lacks a system to digitally verify state credentials or a chain of proof such as parcel ownership linked to a definitive set of residences, and to be able to challenge a reputable claim of residence. Moreover, under the 1866 Civil Rights Act and the 14th Amendment, it is the state, not the federal government, that is responsible for establishing birth records, Wyoming residency, and U.S. citizenship. And this cannot be accessed through digital means today that could enable a self-sovereign ID. The paper I submitted to the committee with Wadir's approval outlines the issues I've discussed here and proposes action items and statutory changes to align Wyoming's laws with GDPR-like principles while supporting self-sovereign IDs in the state. Thank you for your time. Here for questions.
Thank you. Questions for, go ahead, Mr. Co-Chairman.
Thank you, Mr. Co-Chairman. And not so much a question, but I just wanted to recognize that we are operating a working group on digital identifiers, which is hinting to a lot of the things that you've just suggested. So
Good.
just wanted to make you aware of that.
Yeah.
Absolutely. And I'll follow up with that and say, you know, this committee has been a big fan of self-sovereign digital identity, and we've been working on it for the past 7 years. And we've had some challenges with getting all of our oars rowing in the same direction that have held us back. But we appreciate it. I appreciate your interest.
The system should be up probably in about a month.
Excellent. Thank you.
See, thank you.
Welcome.
Mr. Chairman, Joey Correnti. I am one of the members of the County Canvassing Board in Carbon County, and I do appreciate that you've already spoken to the clerks. On the election side, page 4, line 15, no government entity shall purchase, sell, trade, or transfer personal data, which is defined above. This would include, by the definitions I'm reading, that voter data, and the Secretary of State's office in each county clerk already does provide, transfer, or sell. I know for a statewide voter rolls, I have to pay $165, and they will transfer that to me. So I think maybe not the focus of this bill, but that language would be problematic there. Also, the 3-year deletion requirement. I have requested voter information from past the historical archive of individual voters and then statewide voter rolls that has to contain that, so we can find out where did they vote, how did they vote, when did they vote. So I would probably stand against the specific definitions in there. I get the intent, but I think we could be running into some historical public record request issues with the current language. And with that, I'll stand for any questions.
Any questions? Go ahead, Representative Yin.
Mr. Chairman, thank you. Mr. Correnti, I appreciate it. You know, we've had this bill for a while, and I think, I mean, maybe just because it's structured in a weird way, something to talk about is that this is kind of a default. With anything more than the default needs to be explained in policy. So if the county clerks have a policy where they need to keep more than 3 years of data, as long as they've justified it in the policy, perfectly okay. And you know, there's many justifications. I think the specific nature of the bill is just so the public understands what is the policy, what does it look like, what is the reason that we would need more than the default of 3 years. And I think every government agency should have the ability to do that. And so I hear some of the criticisms, but I think the criticisms are off base because, again, all you need is a policy. If you have that policy and it justifies why, then you're good by the bill. So does that make sense? And would that be sufficient for your thoughts on how a county clerk should implement it?
Your thoughts, Mr. Correnti.
Mr. Chairman, Representative Yen, the possibility is absolutely sufficient. The follow through, again, local control. I don't know if all 23 counties will do it. And we're also looking at the Secretary of State's office with that statewide database of voter records. I like that there's an out, but I don't know about engagement or compliance. The other one is the selling. We already have statute that says the Secretary of State or county clerks may charge. I would love for this bill to delete that and say, no, you have to give the information for free. But yeah, I'm willing to work the options. I just want the guarantee that that data is still available to the public because it is, I get it's individually identifiable, but it is public record because it has to do with our elections.
So if it is public record, then it is a public record. And if you look at page 7, the D paragraph, it basically says that this bill yields to any other statute that provides specific rights. And that's intentional. So if there is a public record coverage of it, which there is in the instance that you say, this bill does nothing, literally has no effect on it. Getting to what Representative Yin was talking about, let's say arbitrarily that it doesn't cover it and that it's not a public record. There's additional language in here which says that any elected, whoever the elected in charge is, Secretary of State in this instance, can basically overcome this policy just by writing a policy to the contrary and saying that we're seeking an exception because we have cause. So they have to justify it publicly, but they basically get to do whatever they want. From an exception standpoint, that's where we work the heck out of this to make sure that there's no circumstance where anybody in the state can't come up with a workaround, but they have to do it publicly, right? They have to say, we're working around the data privacy, government data privacy, and we have a good reason to. And the beauty of that is now they have to justify why they're releasing data if they don't have statutory authority to already do it. And that's pretty darn good public policy when you get to the point where either the government can't release your data or they have to have legislative cause, justification to release it, or absent those two things, they have to justify it publicly. That's how the bill's written. And I'd ask you if you're concerned with that after that definition or explanation.
No, with that language in the bill being brought to my attention and that intent being explained, maybe we can actually use the recording of this meeting as the educational piece. As Representative Yin said, you know, there's plain language in here and it's already set up to do that. I think the next point that is going to be concerning is going to be compliance and awareness because, you know, someone might look at this and then it turns into gotcha. Either you made a mistake or you committed a crime. So if we could maybe on my side in the media
I was going to say,
advertise the hell out
you
of
have
this.
my permission to quote that.
And with that, I'm fairly comfortable now. Thank you, Mr.
Thank you,
Chairman.
appreciate it. Any additional questions? All right, seeing none, come on up. Please state your name and welcome.
Mr. Chair, I'm Jeff Kleins. I'm the Director of Enterprise Technology Services State Agency. Just a brief, I'll try to keep it very quick. Friendly amendment on page 6, line 7. Again, on line 8, it refers to a Wyoming resident. Just a recommendation to expand the language to be current or former Wyoming resident. Borrowing language from previous in the bill. I'd recommend language something to the effect of a natural person whose personal data is maintained by a Wyoming government entity, and then to maybe expand it a little bit more, or the parent or legal guardian of such a person if that person is a minor or has been adjudicated incompetent. I think it would expand and allow agencies to understand that they can release it to a current or former, anybody that we hold the data of.
Where did you put that second part? So I got any current or former Wyoming resident. Tell me about the rest.
So if we replaced a Wyoming resident with just inserting language, and I can email this if needs be, it says a natural person or whose personal data is maintained by a Wyoming government entity or the parent or legal guardian of such a person if that person is a minor or has been adjudicated incompetent. I think it just broadens a little bit. So my concern would be, if there's a minor, they would have the one to request their data. Or if there's a former resident, and I use my dad, he, grew up in Wyoming, but then left, but he's been a hunter ever since. Under this bill, he's not a resident and would not be allowed to request his data.
Current or former. All right. I think that, can you read that in? Because I'm missing how current or former then interacts
So
with the
instead
rest
of
of your
current
clause.
or former, and borrowing language from earlier in the bill and leveraging that natural person language, it would just strike any Wyoming resident and insert the phrase a natural person. And I can read that again if needs be.
So you're striking any
Wyoming resident.
strike. Okay.
And then
Continue.
insert a natural person whose personal data is maintained.
Have you eliminated the current or former concept so that they have to have a link to Wyoming? Is this then anybody?
Yeah, it would be anybody, any natural person whose data that we maintain.
So so the key concept is whose data they maintain. Okay.
Yeah.
Will you send that to Talise and we'll consider it?
Yes, I can do that.
Thank you. That's
And
helpful.
Mr. Chairman.
Go ahead.
I mean, you kind of keyed into it in the end there, but it seems like it's a policy choice right now, but if the choice is for any person's data that's held by a Wyoming governmental entity, you don't need the language Wyoming resident or past resident, because you're just opening this up to anybody whose data is being held.
Yeah.
So we would have to make the policy choice to entirely eliminate the Wyoming resident requirement. It seems to me like that's really what the change is at the end of the day.
That's, yep, I agree. And we'll have to chat that through whether we want to. I mean, it opens it up to a broader population, but there might be good cause.
Yeah, and Mr. Chairman, our concern was we didn't want to open it so broad that it would allow everybody just to flood a state agencies with requests to go fishing. Do you have this information? Do you have this information?
Agreed.
Another friendly consideration is, and I don't have language proposed for this, is just something that says state agencies must do due diligence before releasing the information to make sure they're releasing it to the right person. But
due diligence.
from a security perspective, I want to make sure that I can't just say, well, my name's so-and-so and I'm fishing for information. Thank you.
Thank
Mr.
you.
Chair.
Yep, absolutely. Appreciate that. Good points. Any further public comment at this time? Further public comment? Anyone online? Seeing none, public comments closed. All right, back to the committee. Committee, what's your pleasure? We can probably kick this out today if everyone's comfortable with it. We've got some minor suggestions, but I guess I just look around. Do we want to work it today or try and work it later? Everyone okay with today? Representative Ian, what are your thoughts?
Mr. Chairman, move the bill.
All right, got a motion. Is there a second? Motion and a second. Mr. Co-Chairman seconds it. All right, then let's work this bill. I'll just skip ahead to any amendments instead of working page by page at this point in time. Any amendments, Representative Yen?
Mr. Chairman, for now, I'll amend in current or former Wyoming resident. I am a little leery of broadening it to anyone that the entity has data for.
Yeah.
But I'm perfectly fine with current or former Wyoming resident.
Sounds good. We've got a motion to add on page 6, line 7, between any and Wyoming, current or former.
And
Is there a second?
Mr. Chairman, just to
Yep.
elucidate on my motion, I think I'd like it to conform on line 14 as well.
Line 14, a Wyoming resident. Okay, conforming on line 14. And I guess we could probably, is there any other place that we need to conform? That's a good question. We could give flexibility to Talise in case she finds anything.
Mr. Chairman, those are the only two locations in the
Okay,
bill that was
sounds
Wyoming
good.
resident.
In those two locations. All right, we've got a motion. Is there a second? Got a motion and a second. Discussion? No discussion. All those in favor say aye.
Aye.
Opposed, no. That amendment has carried. On B and on C, we could have or their legally authorized representative, just as an addition after resident. I think that's standard statutory language that accomplishes it. So it would be any current or former Wyoming resident or their legally authorized representative.
Mr.
Got
Chairman,
that?
so moved.
Okay, we've got a motion. Is there a second? Got a motion and a second from Mr. Co-Chairman. Any discussion? Seeing none, all those in favor say aye.
Aye.
Opposed? No. That motion has carried, and that's again in two places. And I think on the due diligence, we'll probably have to give that one some thought. I don't think we have any language today. Anyone have any ideas? Additional amendments at this time? Go ahead, Senator Craigo.
Thank you, Mr. Chairman. So on page 7, paragraph D, this is sort of follows up on Mr. Karenny's testimony. And one of my actual larger concerns with the bill is just to clarify that this does not apply to documents that are otherwise considered public records. I think we just need some clarification. And I don't know if we do it in paragraph D or we do another paragraph E, but I just want it very clear to all of our public records custodians around the state, whether they be state agencies or local government agencies, that this is not intended to apply to documents that are otherwise and always have been considered public records. And because I think that clears up a lot of the issues, for example, like on the deeds and recording and whatnot that we had the earlier conversations about. It really clarifies that that's not what we're talking about. And so I would make that motion. I don't know where to put it, and it's sort of conceptual, but I'd make that motion and ask for a second, and then we can discuss where it goes.
Got a motion? Is there a second?
Second.
Got a motion and a second?
Mis-
Go ahead.
Mr. Chairman, I would just suggest make an E, make it very clear.
Make
and
an E paragraph.
unambiguous. Yeah.
Okay. The one question I have, and I guess I actually don't know how this plays out. If you've got a public record, because it's not otherwise shielded from being a public record, well, I guess if it has PII, it probably isn't a public record. I was just thinking through any case where this might cause us problems from deletion, retention. If I want to correct a public record, for example, so it's a public record right now, but it's wrong. It's about me. I'm in the public record and I want to correct it. This would let you do that. If we say this doesn't apply to a public record, I can no longer correct the public record. So I'm wondering if it works perfectly just exempting public records or if there's more nuance to it. And maybe we work this out later. I'm just thinking aloud on this. Any thoughts on that? If we exempt it and we find there's a problem, we can put it back.
Mr. Chairman.
Yeah, go ahead.
Thank you, Mr. Chairman. I'm not sure how this would work, but are there not already systems in place to correct information in a public record?
If they want there to be, there's no obligation. I mean, for some there are, right? Go ahead, Senator. Oh, I thought you were hand up. Nope, you're just holding a microphone.
No, I just think I'm trying to think through it as well. I think that I agree with Senator Craigo. I would like to have it more clear. That the public record is not what's going to have to be destroyed every 3 years. But every record that I can think of that we don't want destroyed, that does have personal data, is probably there are several public records, land records, for example, are going to contain personal information. Court records that aren't confidential are going to contain personal information, a complaint for a divorce or something like that, that you have the right to access, but we don't want to be caught up in the system that it gets deleted every 3 years. That's my concern.
Mm-hmm.
So I think an E paragraph that just explicitly says, that this article doesn't apply to a public.
To anything covered by, and then we refer a public records pursuant to our public record law. All right. Well, I'm comfortable with it. I mean, we'll see. We'll talk about it more, but I don't see why it's not in principle a good idea. All right. Any more discussion on that? We've got a motion. Talisa, are you comfortable with this motion? Obviously, it's conceptual, but it seems like it's pretty straightforward.
Mr. Chairman, just to clarify, so we want to add a new subsection E, just saying that this article shall not apply to documents with personal data or whatever the language is in the Public Records Act that are subject to the Public Records Act or something along those lines.
Basically, any document that is otherwise covered by the Public Records Act, or it would be exempt from this. So if it is covered by the Public Records Act, and probably to the extent that it's covered by the Public Records Act, right?
Right, and
Be
I think-
cautious on that.
Exactly. I think you don't want the language that it has to contain personal identifiable information, because that may narrow it too much.
Yeah.
I think if it's covered by the Public Records Act, then
Yeah,
we exempt it out.
To the extent that it's covered by the Public Records Act, that portion is exempted. Yeah.
Yeah.
All right, good. All right, all those in favor say aye.
Aye.
Any opposed? All right, that has carried. Any further amendments?
Just discussion, Mr.
Yep,
Chairman.
go ahead.
Yeah, I mean, I want to make it very clear that like, this isn't meant to hinder our vendors. This isn't meant to hinder our agencies. What this is meant is to be a piece of public transparency, so people know how governments are using their data, especially in places where it's not public record, right? And so I think it's just super important to make sure that that's the message that we're sending when we draft this and move forward with this bill, is that this is about government transparency.
Excellent. Senator Craigo.
Just a thought, and one of my hesitancies with this whole bill is not the protection of the data. It's really the stuff on page 6, which allows for you to send requests into the public agencies and ask them for a copy of the personal data, which, if it's a public record, they can do under the Public Records Act already. If it's not, I'm just curious about and a little bit nervous about whether this prompts people to start sending in requests for data that may not even exist, right? So because I represent the county and I do help do a lot of public records requests with our county clerk, I know how much time and effort those take up. And I know we're having that discussion in other committees right now, but does this then prompt, a lot of additional work at home for a lot of our county clerks, a lot of our city clerks, et cetera, when data doesn't even exist, right? So people are worried about whether their data is being held by a particular agency, whether that's state, local, or otherwise county, and that they just send a bulk email to every single county, which this happens, right? We get those public records requests all the time. What's that look like? What are we doing to them? And the data may not even exist, but they still have to go look for it and expend hours doing that. I guess I'm a little cautious about that. I'm fine with the rest of the bill. That part makes me a little bit nervous on how are we prompting work for folks on stuff that doesn't even exist? And I don't know how to handle that, Mr. Chairman.
Well,
that's my concern.
That is the justification for why lines 9 through 12 on page 6 exist, right? That you can charge reasonable fees in the same way that you can charge fees pursuant to the Public Records Act. Even though this isn't technically a public records request at that point, it's a private records request. But that being the, if I wanted to send it out to 1,000 different entities in the state, that's going to be pricey for me.
Mr. Chairman, just to respond to that, I understand that some people are willing to pay that, and it's not necessarily the fee that's the problem, it's the man hours, right? A lot of our, small towns and small counties
Right.
don't have the staff to fulfill these requirements already. It takes up an enormous amount of their time, and most of them don't have the ability to hire a public records officer to do nothing but go respond to public records requests. So the money's immaterial, the fee's immaterial, because those don't generate enough to hire someone. So you're dedicating staff offline. You're taking them away from paying. If we're talking about the clerk, you're taking them away from recording duties or bill paying duties or whatever it is, doing car titles, all the million different things that our county clerks do. So I'm just throwing that out
Yeah.
there. I mean, I'm gonna vote for this today. I don't know where I'll ultimately be as it moves forward. I need to dig into it a little bit more. That was my only concern.
It's a good concern.
And maybe it's something we can think about between now and session on
Sure.
how we could deal with that. I mean, because literally we're prompting people to write a letter and send a bulk email to everybody. And a lot of your local agencies don't charge for the very first hour, right? Like our county, you call, we don't charge for the first however many minutes or hours it takes to do the public records request, because we feel that's part of our duty as a county is to respond. So there would be no, payment, and a lot of the local government entities are the same. And so just throwing that out there, that's, I think we're going to get some, we'll get some concerns from our local government entities, whether it's WAM or County Clerks Association, as we move forward.
They weighed in on this bill a couple of times in the past, just so you know. I mean, this is the second year we've worked it, and WAM and others were there and ended up being comfortable with it and didn't raise that concern.
We'll see, Mr. Chairman.
Fair enough.
I just think, as I read it, I think we're just inviting that, which is fine as long as we know what we're doing. That's
Agreed.
all. Thank you,
Okay.
Mr. Chairman.
Thank you. Further discussion on the bill before we vote? Okay. Seeing no further discussion, roll call on 26 LSO 12 as amended.
Senator Crago,
Aye.
Senator Nethercott,
Excused.
Senator Olson,
Aye.
Representative Filer,
Aye.
Representative Wasserberger, Representative Yin,
Aye.
Co-Chairman Singh,
Aye.
Chairman Rothfuss.
Aye.
We have 7 ayes, 1 excused.
All right. Great. Now, we have passed our lunchtime a little bit. We need to break for lunch now. Do we want to maybe target a 1:45 return? Does that seem reasonable? We could probably make a 1:45. Everyone comfortable with that? Okay. Then we are at recess for lunch until 1:45. See y'all then.